politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
I think we're in this sort of phony war right now where there's just a lot of uncertainty on the data.
I don't want to overreact to 1 month's number. If our base case is that economic activity is slowing.
You just really need to pay attention to valuations in a way that we really haven't had to.
The economy is still chugging along.
Why sacrifice the economy to the altar of a 2% inflation target if you don't need to?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance begins right now. And at some point this morning, Chairman Powell's waking up and getting ready for a two-day meeting down in Washington, D.C. Concludes tomorrow. Tomorrow morning, though, we get the big one. CPI, 8:30 Eastern Time. Speak to a lot of people this morning already. Like 8:30 is bigger tomorrow than the Fed decision at 2 p.m.
Oh, sure. Mike Schumacher saying that also. I mean, basically this idea that if we do see some sort of stickiness to the inflation or upside surprise, you could see a pretty big move. If you see a downside surprise, you could also see a pretty big move, because we're all playing this sort of narrative fallacy, as Steve Major said, which is basically looking for how to put the tea leaves together in a way that gives us an edge in an edgeless world right now.
Operating around some really fine margins. I think there is just the belief that at 8:30, when that CPI number drops, it shapes the decision they make, not going forward, but the projections that they'll put out at 2 p.m. Now, I just wonder to what extent that's actually true, but that seems to be the view on the street, that we could have a difference between 2 cuts signaled in that median dot and 1, based on what CPI actually looks like. And I imagine they've already got the data anyway, and they can figure that out.
We're actually going to be live on the ground tracking their progress as they get it, and we'll get tea leaves about how shocked they are and just how much they massage. We're not actually, that's complete lie. But basically, that's what everyone's going to try to do to get into their heads, to try to understand how much that really does change things. Arguably, it shouldn't at all, because arguably they've been talking about several months of data, and not one print is going to really alter their views. It's not as though they're going to suddenly hike rates if inflation goes to 1% month over month. I mean, they're not going to do that. They're going to look at the data and they're going to say, well, what kind of skewed this? I think a bigger question is going to be, you know, where is the balance of risks, and the 2 dots or the 1 dot? And is Jay Powell waking up this morning? He said 1 dot, is it 2 dots? I don't know.
Going to make him do 1. Going to make him do 2.
I don't know. It's stressful.
It is stressful for him, not for us. It's easy for us because we just get to sit here and ask questions. He's got to try and answer them.
I know.
And in the news conference, he's got to try and answer how he views the labour market right now based on the data we had on Friday. And we've said repeatedly on this programme, I think that's going to be really, really tough for the chairman based on the 2 very different stories the 2 surveys tell you.
Especially because it's not just those 2 surveys. It's also all the other data. I mean, we were talking about how even some of the soft data is conflicting with itself. For example, we see signs of labor market softening, and then the U.S. small business optimism comes in at the highest level today, going back to the beginning of this year. So which is it? And it raises this question, you know, where is the balance, and how do you sort of get a mooring? I will just say, I did get a note this morning saying we need to keep watching the Treasury auctions closer. And
yeah, who is that note from?
It was Mohammed. Thank you, Mohammed. I will just say I'm on board with him. I do think that we need to be watching this for a gauge of just the nervousness and the sort of price discovery that we get at each of these debt sales.
Memo to Mohammed, who will be joining us tomorrow on the Fed programme.
It's a different Mohammed.
No encouragement is needed. It's a different one?
Yes.
Okay, I thought we'd just call Alarian Mohammed.
Well, there are other people who are named Mohammed, just letting you know.
Really?
Yes.
Thank you. Thank you very much for the
somebody
update.
else, yeah.
I needed that. All right. Usually, you know, if it's someone new and it's not a friend of mine, you use the full name.
Well, I know, but I don't want to like blow his cover, you know what I mean?
All right. Well, thank you to the other Mohammed. There are 2 of them. That's amazing. Thanks, Felisa. I appreciate it.
Anytime.
Things you don't know that you learn from Brammer. Equity futures on the S&P look like this. The score's shaping up as follows. We're negative by 0.25%. Yields are down by 4 basis points on a 10-year, 442.56. The euro just a little weaker here, down a third at 107.29. Coming up this hour, we'll catch up with Alicia Levine of BNY Mellon on why she's constructive on the markets through 2024. Bill Chappell of Truist saying Ozempic is no threat to Krispy Kreme. And Santander's Stephen Stanley looking ahead to CPI data and the Fed decision. We begin with our top story. Stocks hitting new highs ahead of tomorrow's doubleheader. Alicia Levine of BNY Wealth saying this: markets are pricing in a soft or no landing with a cutting bias at the Fed. We agree with this view and are constructive on markets through 2024. Alicia joins us now for more. Alicia, hello. Good to see you.
Good morning.
What would you expect from Chairman Powell in that news conference tomorrow?
So he's got to thread something really interesting, because we're already at 4% unemployment, which, as you know, in the last SEP is where the Fed predicted for the end of 2024. So we're only, barely halfway through the year. And to move from a 3 cut to a 1.5 cut, let's split the baby and say 1.5 cuts, to go there, something has to change in the data that is consistent. So either GDP has to be ticked up a little bit, or the inflation has to be moved up a little bit. And it doesn't have to be for 2024. It could be in 2025. So maybe PCE moves to a 2.3 from a 2.2. But it has to be consistent if they're going to go from a 3 cut to a 1.5 cut, right? They can't keep all the other numbers the same. And so is the story slower growth, higher inflation, i.e. a little stagflationary, or is it growth is okay and therefore inflation's a little bit higher, so we're going to go from 3 to 1.5? And that's kind of the circle that the Fed has to square here. How do you tell your message? Is it a stagflation message, or is it a growth and therefore inflation's coming down more slowly?
So you've got a 2-part challenge.
Right.
The first part is what you actually just did. The second part is to work out what the market's going to do in response to that.
Right.
Are you convinced either way?
So first of all, talking about the labor report on Friday, I find it confounding. I still don't understand it, to be honest, and I suspect that some part of it is going to be revised at a future date, because it's actually very hard to get
wrapped around. I'll ask you. You say some part. Which part?
It's hard to know. It's really hard to know. It's really hard to get fewer people in the labor market, therefore higher unemployment rate, and yet nearly 300,000 jobs on the top line, while the household survey is negative. The household survey is people working on their own, not at firms. But we've seen, businesses start at the greatest rate ever in the last year in the country. So neither of those numbers make sense, is what I'm trying to say. So I suspect that's going to be a little bit revision. But let's move that aside. I think we're going to hear higher growth and stickier inflation. I don't think we're going to get the stagflation story from the Fed.
At this point, what do you do with that? Right. I mean, basically, everyone...
Stay long.
Stay long what? Stay long NVIDIA?
So look, we are constructive on markets because, as we've talked about here at this table, for administrations that are running for re-election do everything to support the economy. So we're fine through the end of the year, although I think Europe, Mexico, and India are good examples of how elections could maybe provide some volatility towards the end of the year, and certainly we're the granddaddy of them all there. But ultimately, we're very positive because the earnings and the margins keep on moving up. That's the fundamentals. So as the fundamentals move higher, you stay long here. And so, there will be, I think, as we've seen from the beginning of the year, more volatility in the bond market than the equity market. The equity market has been remarkably calm this year. Barely a 1% move in either direction the entire year, right?
So, yeah, but are bonds still in the ballast, right? I mean, basically, is it just cash and is it NVIDIA, or basically the tech behemoths that are throwing off a lot of cash? Is that the playbook in a time that you can't rely on the data, you can't gauge the macroeconomic backdrop, and frankly, you can't even gauge the response of markets to that?
Right. So, look, bonds are still the ballast. I think the issue of supply and the issue of the deficit is real, and it will become more real as we move past the election season, right? So I think this year we're fine. We have massive liquidity in the system. The Fed started the taper of QT. There's just a lot in the system to support liquidity and markets here. Then you have to get to 2025 in the conversation over what happens to the Trump tax cuts, right? And there are very different prescriptions about this, both of which will be inflationary. So, we're good through this year, and then we have to start thinking about where does the puzzle, how does it work after the election? And that's really unknowable, right?
Isn't this really sort of unconventional to forget about 2025? Just sort of leave it out there?
So, look,
we get to November and we only start thinking about it then?
The fundamental side, we think, is quite strong. What will wind up happening around the election are sector-specific stories. So which sectors do better under what administration? And that's how you will see markets move. It's going to be less about the top line, less about the growth, because we think fundamentally the growth is good. That's our bedrock for the story. It's just which sectors will be more affected under which administration.
As we talk to a lot of investment managers, I'm struck by something that Ben Bowler of Bank of America had written in a recent report, where he said the longer this kind of dynamic goes on, the more investment managers stand to lose out and actually lag behind in terms of their performance if they're not overweighted to a number of very specific stocks, and if they're not in highly consensus positions that are already crowded. How fragile does that really make the market right now?
So it's uncomfortable. I mean, 3 stocks are 20% of the S&P. Think about it. We were crying when 2 stocks were 14% of the S&P, and now we've got 3 stocks at 20% of the S&P. So I wouldn't say it's fragile, because these are the least fragile companies on earth because of the cash flow, right? So ultimately, you're looking at cash flow to provide the ballast, and of course, that's where the margins are as well. But stories change, and look at the dynamism in the economy. You know, the top doesn't stay the top forever. So we think for the near future, let's say that we're in a cycle of investment in AI, this is fine. At some point, that markets change. Like, you can't think this goes on forever. It's very rare to have the top 10 be the top 10 the beginning of every decade for 5 decades. As we know, Microsoft managed to get back on it. But that's the exception, and that's why it's rare.
If it doesn't trickle out, the sort of dynamic backdrop for some of the big tech stocks, if it doesn't broaden out to other companies, is that going to sort of unravel it? Does it need to sort of broaden out in order to keep this virtuous cycle of investment? Or is it sort of the winner-takes-all kind of moment?
It feels like a winner-take-all moment, but that's okay on the index level. But in the end, the market is broadening out. We've seen industrials, we've seen discretionary start moving higher, and healthcare is starting to move again. We've got great innovation in the healthcare sector. Think of the data we saw what happened at the FDA because of Eli Lilly yesterday. That was great. I mean, we have innovation all over this economy. And I think to just focus on there's 2 stocks, there's 3 stocks driving it, and therefore we're going to cash, you're going to miss a lot of upside here. You know, we invest in innovation. This is the greatest country for innovation, and our stock market reflects it.
We'll talk about healthcare a little bit more in just a moment. Alicia, you're going to stick with us. Alicia Levine there of BNY Mellon. Your equity market a little bit softer on the S&P 500 with an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The main shipping channel into Baltimore's port has been fully reopened. That follows the March collapse of the Francis Scott Key Bridge. It also follows a massive cleanup operation. Workers removed an estimated 50,000 tons of steel and concrete from the water. That wreckage left the port of Baltimore effectively closed for several weeks. Officials say that they hope to rebuild the bridge by 2028. Golden Goose and its shareholders are seeking to raise about 558 million euros in the luxury sneaker brand's IPO. That will give them an implied market value of up to 1.9 billion euros. Bloomberg had, though, reported that Golden Goose was hoping for a valuation at about 3 billion euros, a valuation the CEO told Bloomberg Brief at the time that he was happy with. Elon Musk says that he will ban Apple devices from his companies if OpenAI software is integrated into the iPhone maker's operating systems. He called it a, quote, unacceptable security violation. Apple announced that its customers would have access to OpenAI's ChatGPT service through its Siri assistant. The new features are set to be rolled out later this year. Musk, for his part, had co-founded OpenAI, but had a falling out with the company, and he's currently working on his own competitor to ChatGPT. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. That stock is negative. Apple down by about 0.2% in the pre-market. Up next on this program, the Morning Calls Plus, Truist, Bill Chappell on why he says Ozempic is no threat to Krispy Kreme. More on that call on the other side. From New York City, this is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities.
Could face bigger challenges. Britain was elected.
Was going to keep winning World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Stocks on the S&P 500 softer here by about 0.25% on the S&P, and the bond market yields a little bit low. We're down 4 basis points, 442.96. Let's get you some morning calls. First up, D.A. Davidson upgrading Apple to buy from neutral with a price target of 230. The analyst saying the new AI features unveiled yesterday will drive an iPhone upgrade cycle. That stock a little softer this morning. Your second call from Oppenheimer, lifting its price target on NVIDIA to 150 from 110. The analyst still seeing the company as the best positioned in AI after the 10-to-1 stock split. We're down 0.25%, which is a rare thing. I've said that twice in the last couple of days.
It won't last.
We'll see. And finally, Truist upgrading Krispy Kreme to buy with a price target of 15. Analyst Bill Chappell saying Ozempic is not enough to weigh on the stock as people still like their sweets. And in the GLP-1 overhang has largely played out. The stock's up 1%. Bill joins us now. Bill, great to catch up with you. I've been looking forward to discussing this with you. Can I just pick up on that last point you made in that quote there, Bill, that ultimately the GLP-1 overhang has largely played out? What convinces you, Bill, of that?
Good morning, and thanks for having me. Yeah, there are two things there. One, today there's a $68 billion indulgent snack market. I mean, you think about how many snacks you've had over the past week and how many of them were indulgent or sweet versus better for you or healthy. And I think you'll find that it's a very, very strong market and people still like their sweets. And Krispy Kreme is only about $1.5 billion of that, so less than 1% of the total market. So our belief is even if the pie does shrink over the next 2 years because of Ozempic or Wegovy or the GLP-1s, there's still a lot of room for this company to grow. The second part, Krispy Kreme will say they're in the business of dozens. They're for parties, they're for office gatherings, they're for stuff like that. And while certainly GLP is going to have some impact, as we put in the note, you don't want to be that guy who you're on Ozempic and you bring the vegetable plate to your kid's 9-year-old birthday party. Yeah, I think there's still going to be a good, steady demand out there for these donuts, especially because they taste so good.
Hey, Bill, you don't know me. That's all they'll be eating, carrots and broccoli. But that's another story for another day. Bill, you said this relationship with McDonald's is an important one. When we speak to some of these companies, they talk about diversifying, healthier snacks. McDonald's isn't what I typically think of as healthy, and this isn't what I would indicate as diversification. Bill, why is this partnership so good for this company?
Sure, thanks. Two things. It's good for both companies. For McDonald's, they want to have something different on their menu. It's a treat. Again, it's an indulgence, much like you would have an ice cream cone at McDonald's or something like that, but throughout the day. And so it does diversify what you can offer. And again, we like to treat ourselves with something. For Krispy Kreme, it brings them to the kind of the major leagues. I think a lot of retailers, a lot of even consumers think of it as a sleepy Southern treat that, hey, if I'm in Atlanta or if I'm in Charlotte, I'm going to stop in and try a Krispy Kreme, even though there are locations throughout the country, and LA is one of their top 3 markets. And so this makes it available to everyone. It's kind of like you think of Chick-fil-A, and people don't worry about Ozempic. When they think of Chick-fil-A, they just think, hey, that's great stuff. I want to go and find one. And I think the same thing, bring them to the big stage, you'll see them more available, not only at McDonald's, but I think national mass retailers like a Walmart, like a Target, regional grocery stores that are not in the Southeast, like H-E-B or Myers. this opens a lot of doors for availability of Krispy Kreme. And again, these are not your old 7-day-old donuts. This is delivered fresh daily, tasting like a Krispy Kreme, like you just bought it from the store.
Oh, this is killing me, John. You know, I have to tell you that my first assignment when I was in Fargo, North Dakota, I was 22 years old, and there was a Krispy Kreme donut store that opened up, and people camped out for the privilege of being the first in the door to have the fresh Krispy Kreme donuts.
Won't surprise the audience that you wanted to do an investigative piece, and you didn't just want to go down there and interview people.
Yeah, I wanted to know what was in it, whether it was truly fresh.
What was behind the lease for the store?
Exactly. Whether the finances were solid. Bill, I am curious about, you know, whether this is sort of a broader thing or whether you just love Krispy Kreme. I mean, basically, do you think that on a broader scale, the disruption from GLP-1 drugs has basically been borne out in the market, or is this just basically you love Krispy Kreme?
No, I mean, I think I cover several snack food companies and packaged food companies, and I think you can look to last August till today, and there's been just an overhang on the whole category. Now it feels like that's baked in, for lack of better puns, and I feel like it doesn't mean it isn't going to have an impact, but now there's a decent amount of the population that's on GLP-1s. They're acting the way they're acting. They're buying less, and you're seeing that in kind of packaged food volumes declining. And so I think you see that reflected in packaged food stocks. With Krispy Kreme, I get it. The stock is down, even despite the McDonald's relationship, down 20% year to date, and 60% from the high that it had right after the McDonald's announcement. And so that's where I feel like, okay, seems overdone. You're kind of throwing the baby out with the bathwater.
This feels like an ongoing conversation, Bill. Let's do this again soon. Bill Chappell there, at Truist on the latest upgrade. Thank you, sir. That stock is positive in the pre-market by 0.7%. Alicia Levine of BNY Mellon is back with us. Alicia, we talked about AI and NVIDIA. GLP-1s has been another massive feature of the whole trade. I feel like healthcare just got reduced to GLP-1s. Was that the wrong move?
Well, it's not the wrong move. It was the most obvious move. But I think what you're going to see with AI in drug discovery is going to be a boom in very effective drugs for diseases that we are very unhappy with, that have been very hard to treat. So I think that is the sort of the second derivative trade here in AI, which is drug discovery and drug targeting and molecule targeting. So that's actually really exciting. I mean, that's part of our excitement over AI, because it's going to filter through the entire economy, and every business is going to have to incorporate it. And I think healthcare is the prime area that you're going to see great outcomes from this.
I agree, and I'm glad you said that, because frankly, I'd rather see AI create a new cancer drug than an amazing Bitmoji. But that's just me. I am curious, though, just to go on the GLP-1 drugs, do you think that it's been overstated, that this will be revolutionary, we'll all be skinny, we'll all not want to eat foods except for carrots and broccoli, which I actually happen to like?
So we have a terrific healthcare analyst named Matt Keeler, who analyzed the food market, the drug market, all of it. He thinks it's overall a $500 billion market, $500 billion. Okay, and that's not with massive assumptions, because it works on not just obesity, but it turns out you get better outcomes in cancer, you get better outcomes in kidney disease, and you get better outcomes in heart disease, because obesity is a comorbidity for all these diseases that kill us. And so it actually could be extraordinary here, okay? So it's a huge market. And to the extent that you're seeing data and other disease indications, it's just going to keep on going. I mean, yes, that kind of margin that we see with Novo or Lilly is every other company's opportunity to come into the market. But overall, the excitement, I think, is real, particularly in these other disease areas. I mean, think about it. If someone did a trial on alcoholism, right, because it works on impulsivity, what would that do to the market?
A $500 billion market, is that including the impact on other kinds of food items that we consume here in the United States?
He's just talking about the drugs itself. So to the snack issue, he sees just a 1% calorie reduction, which is not enough to affect any of these snack companies or McDonald's or anything.
Wow.
Yeah.
Okay, Alicia, thank you. Alicia Levine of BNY. When was the last time you had a donut? Ages, right? I'm pretty sure Katie Lyons said on this program that she'd never had one before.
Yeah, that's.
Do you remember that?
Yeah, she also hasn't had like dark chocolate or
something like that. Never eaten chocolate.
I mean, I've had donuts before. I used to get them for my kid's birthday.
And by the dozen.
It's true. I'd bring them to the school, and then I'd be like, you know.
Oh, you were that mum?
I was that mum.
Like super popular.
Oh, totally.
Everyone loves that.
Everyone gets a donut.
Yeah.
Get some seconds. Here you go.
People love coming to my house as kids because we had Italian food.
Oh.
It's freshly made, you know. Everyone loved coming to my house for dinner.
That's amazing.
Oh, it was amazing.
Yeah.
I miss it today. I'd still live with my mum if she was in America. Any day. Any day.
She can come over anytime.
Cook for us any time. Private chef, I would love that. Mum, I'm sure you're watching.
Yeah, exactly. Come back.
Coming up next, TD's Mark McCormick alongside Santander's Stephen Stanley, counting you down to CPI tomorrow morning. At 8:30 tomorrow, it will be the only thing we're talking about. FOMC might already have that economic data because they've got to plug it into their projections for the next couple of years. So we'll see what they've got to say at 2 p.m. when we get the statement and their projections. 30 minutes after that, a news conference with Chairman Powell. Equity futures on the S&P negative by about 0.25%. The opening bell, 60 minutes away.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
60 minutes away from the opening bell. Equity futures negative by 1/3% on the S&P 500. On the Nasdaq, we're down about 1/4. On the Russell, we're down 3/4%. Turn the page, switch up the board and check out the bond market. The scores look like this. A 2-year, 10-year, 30-year with yields lower at the front end. We're down 4 basis points on a 2-year to 4.84. We're down 3 on a 10-year to 4.43.55 on a 30-year. Down a couple of basis points to 4.57. You want a snapshot of Europe right now? It's a lot of red. Looks like this. French equity market down 1.2%. French bonds down, yields up 6 basis points. The euro just a little bit weaker here, Lisa, breaking down. Remember last week after the ECB, we saw 109. We're back down to the low 107s right now.
And a lot of it stems from the snap election. Ian Steely of JP Morgan Asset Management brought us something that I thought was really important, which is France was just downgraded recently. And there is this problem about a debt load that's going to get a whole lot worse if you have a government that wants to borrow and not necessarily raise money. That is the specter being raised there. I know it's an idiosyncratic story on one hand, but is it? And I think that's the increasing story. There is a market response to sort of spending profligacy. And we're seeing that around the world, not immune to it here in the United States, certainly. And it's the reason why people are wondering about the political risk, really, that we're not pricing fully.
Do you think this sort of like Liz is going to make a visit to the French bond market? Is that what you're trying to suggest?
You know, Liz, if you're out there, you've been trying to reprise your reputation through a lot of interviews. I think that it could be an interesting warning meeting if she met with Emmanuel Macron, although I'm not sure he's the right person to be with.
The ghost of Liz Truss's government sort of making its way around global bond markets.
You know, that was an amazing moment when an actual fiscal change or a governmental policy shift could have that massive of a significance on the currency market, on the debt markets, to spur a central bank response. Was that sort of the whiff of something that was not the first?
Could we see more of it? And I know you're not suggesting sort of stress and that pension fund related stuff that took place in the UK. I know you're not suggesting that. Just the bond market pushing back against a policy that a government might suggest.
Especially at a time of such uncertainty where we've seen such volatility in the bond market. We were talking to Alicia Levine just now, and she said that she actually sees more volatility in the bond market than the stock market because of a lack of certainty on where policy is headed, a lack of certainty on inflation, and a lack of certainty in fiscal policies and how they will be received by the bond market.
A lack of certainty around financial stability as well. You'll notice a theme in our story lineup. Under surveillance this morning, PIMCO saying more regional bank failures are on the way. John Murray, the head of the firm's global CRE unit, saying, quote, the real wave of distress is just starting, and that lenders still have a very high concentration of troubled commercial real estate loans on their books. Murray also pointing to US debt funds where more than $200 billion of loans are set to mature through 2025, which he says will struggle to refinance with higher rates. These are the so-called very slow and very long variable lags that you've been talking about.
And it really speaks to Mark Zandi's analogy of the system as this sort of engine that's kind of shaking violently and has pieces of duct tape around it in the form of a lot of Fed policies. Look, there is a real risk here. And it's clear, according to a slew of data points that we've gotten over the past few weeks, showing that there really is some concern, and we haven't had the full repricing yet. We even heard from Bob Diamond, who's constructive on regional banks. There needs to be more merging. There needs to be more consolidation, one way or another, or else they'll just be failures. It seems like that is a risk. Question is, we can know it's going to happen and not understand the consequence in markets. Do people have the same kind of trigger response to it the way they did with Silicon Valley Bank?
We're seeing it happening, particularly in CRE. Here's an example of it. We've got a building here in New York City owned by a related company's affiliate, set to be sold at a really steep discount. Empire Capital and Namdar Realty agreed to purchase the property at 321 West 44th Street for less than $50 million, according to people familiar with the matter. That's a roughly 67% discount from what was originally paid in 2018, and there is a loan outstanding for far more than that $50 million.
Yeah, about $100 million. So basically, this is an underwater loan at a time when it's not the first, it's not the only one, but we haven't seen that many forced sales. And arguably, as people try to unload some of this, you'll get actual price discovery, and that can be brutal. This was P. Diddy's studio. He was on the second floor of this building. It is on 44th Street in New York City. There are a host of different establishments around there of varying degrees. It just raises this question of how far are we? What inning are we in the commercial real estate destruction, is it really specific to office space and specific properties in specific cities, or is it more widespread with a greater degree of potential exposure?
Starting to come to the surface, that's for sure. Investors looking ahead to tomorrow's doubleheader will have CPI at 8:30 Eastern Time, followed by a Fed rate decision at 2 p.m. Investors expecting the Fed to hold rates steady, but we'll be looking for clues from Chair Powell's news conference about when they might start cutting. Joining us now to discuss is TD's Mark McCormick alongside Santander's Stephen Stanley. Gents, great to catch up with you. Stephen, I've got to start with you. We caught up with you a few months ago. I believe you were sat right here to the right of me, not to the left of me. And I was speaking to this individual about when we were going to get that first interest rate cut. And you said something like November. And Lisa and I sort of looked at each other like, this guy, a little bit nuts, a bit crazy. Started 24, everyone's looking for March. And you're like, November. November, it's still November, isn't it?
That's still my call, yeah. Yeah, I think the inflation data are not cooperating, so it's still going to be a while.
How do you think they'll view the labor market data from Friday?
Yeah, I mean, I think Chairman Powell kind of broke the link a little bit between the labor market and the economy and inflation earlier this year when they suggested that maybe we can have the economy continue to grow and still get inflation down. I think that was a bit of an ill-fated shift on his part. But I think the labor market only comes into play, it feels like, if things start to weaken dramatically, and obviously may suggest that that's not happening. So it's back to inflation.
Matt McCormick, I want to turn to you. How important is tomorrow morning's payroll CPI print?
I think it's important, but I think, as you mentioned, the key thing here is like progress on inflation. I think that's part of the thing, is it's a stumbling block. We're not seeing the progress that we need. You're also going to see the Fed likely revise up their core PCE numbers in terms of the target number they're looking at. So when you think about whether or not inflation is moving in the right direction, it is. Is it moving fast enough for the markets to kind of get on board with the certainty of how many times they can cut this year and reduce the volatility in the bond market? I don't think we're going to see that tomorrow. So I do think the key here is there's an intersection of volatility that's not priced in the markets, the geopolitics, which continues to push on the fiscal side, and the fact that the markets aren't really prepared for any of this.
So do you think, Mark, that the Fed's going to respond to this by doing absolutely nothing, trying to keep things as stable as possible and having, and otherwise, just in terms of the balance, a bit more of the dovish side of things than hawk?
Yeah, I think they're going to try to sound neutral. They can't really project anything into September or November or December at the moment. They still need to see 4 inflation reports till we get to the September meeting. So I think right now the forward guidance, and I think markets understand this, there's not much significance that comes from forward guidance because we're all data dependent. So as we kind of watch the data come in, if it's a soft month over month, which is maybe a 0.26, or if it's a hot month over month, which is maybe 0.28. We're talking about decimal points, which, the Fed can't really provide the guidance for the markets to feel very clear about where we're going on this. And I think the one thing that, most people who are covering the market now feels much clearer about is we're just going to see more volatility. And I think that's the key thing that we need for markets is really you should be trading and thinking about the surprises. Everything needs to go right to get to this clear path, but you only need 1 or 2 things to go wrong. And that's where the asymmetries lie for markets, especially on the FX side.
All right, well, we'll get to the FX side in a second. But, Stephen, from your vantage point, this extreme volatility, is there a cost to that when it comes to both economics but also just market risk when we talk about how rapidly some of these yields are swinging, even if they end the day at the same place?
Well, I think it makes it very difficult as an investor. And the Fed certainly doesn't like to cause volatility, so they're going to try to do what they can to give an accurate picture of where they're headed. But the problem is that they're data dependent. And so if the data are volatile, back and forth, high and low, then the markets are going to be volatile, and the expectations around the Fed are also going to be volatile.
Do you think they still believe that financial conditions are tight?
I think they believe that the level of the funds rate is very tight. Obviously,
what do you think that's based on? Because we heard from Bill Dudley, former New York Fed president, wrote a great piece on Bloomberg Opinion and said maybe it's high indefinitely, not high for longer.
Yeah, I think the problem for them is that there are tailwinds that are working against what they're doing with the rate level. One is their own balance sheet strategy, where the balance sheet is still too big, and that's a lot of excess liquidity sloshing around in the system, making financial conditions easier. And the other one is fiscal policy, which is continuing to stimulate the economy.
the stress that we are seeing, pockets of it, we're seeing it at small banks, regional lenders, saw that last year. Got PIMCO this morning warning of more to come. We're seeing certain buildings have some difficulty and get priced at really, really steep discounts, particularly here in Midtown Manhattan, another example of that. Where do you think that is on the radar for these officials?
Definitely watching it. I mean, I think to some degree, the Fed probably looks at the CRE situation and says, look, this is something we can't really address directly because this is a secular change in the demand for commercial real estate after COVID, right? So there's only so much they can do. They can help to smooth the transition, but this is a change in the valuation of this sector that needs to happen. But I think what they're watching more broadly is, are we seeing the effects of high interest rates? And it does feel like we're starting to see that more. You're hearing it more in the housing sector. The ISM non-manufacturing report last week, there were several mentions by respondents in different industries who were saying high interest rates are really a negative for my business right now. So, I mean, I think from that perspective, they're probably justified in feeling that the policy rate itself is high, but as you say, financial conditions generally are not particularly restrictive.
Mark, to build on that, I remember a couple of months ago, people were looking at property markets around the world to determine which currency to go with. That was actually one of the big risks and potentially indicators of a central bank that would essentially be forced to cut in order to preserve the sanctity of the economy in that region. Do you think that that's still applicable?
Yeah, that's something we track very closely. We kind of look at the effective mortgage rates and how it's correlated with interest rates and kind of which currencies are most vulnerable to that. You could play the home base here, but it's very clear this is on the Bank of Canada's radar screen. And it's very clear this is something that was on most European currencies' radar screen. I always find the primary case study was Sweden, which was if you looked at the mortgage rates, the bulk of the mortgages were under 1 year and they were floating. So Sweden already took the pain medicine and they've already had a massive move in the currency market. Things are starting to stabilize a little bit, but that is something that's on, I think, the radar screen, which are the next tiers of countries that are very vulnerable to a housing disruption. And again, this is something that's very insulated and something that's resilient for the US, at least relative to other currencies, and how you would look at the housing market as an impact. So I'd say the one that's on everyone's radar screen that we talk to happens to be Canada. Largely, again, because they're mostly under the 4 to 5 year fixed, and those fixed mortgages are adjusting from the COVID period now. And you're basically seeing mortgages go from 1.5 to 2, all the way up to maybe 5-6%. So that is something that is going to feed into consumer spending, consumer slowdown. And this is part of the G10 central bank divergence story, which is, the Fed might not just have to go as quickly or might not be able to go at all, where all these other central banks do have to go, and they have to go now.
Stephen, housing is one thing. Commercial real estate, though, is another. And you are seeing, as John mentioned, $200 billion of maturities coming up within the next 24 to 18 months. And there's a question of whether we're accurately pricing the risk that this could cause the Fed to respond in a more material way. Should it be, I don't want to say contagious, that might be too strong, but have sort of trickle-out effects. Do you buy into any of this? Are you watching this to really understand that risk?
Well, I think one thing to keep in mind is that, I mentioned the balance sheet before, I mean, liquidity is still plentiful, right? So this isn't likely to lead to a broader credit crunch. I think the other issue is, unlike the housing situation 15 years ago, there's not a ton of like leverage spread through the system that hinges on commercial real estate. So I think the risks are very different than they were in the lead up to the financial crisis. Having said that, I have to say, banks are sitting with a lot of loans on their books that are in some jeopardy. So I think there will be further adjustment going forward. It's just a matter of how broad that pain gets and what the overall environment. Is it resilient enough to manage through that?
We're going to continue this conversation with Mark McCormick at TD. I know you've got to run, so I just wanted to get some details from you. November's when they're going to move. First cut, that's your call. Can we just go to the dot plot just quickly tomorrow? What's that look like, 2 or 1? I think it's probably, median is probably 2. There'll probably be a minority of people with 0 or 1, though. What do you think the forecasts directionally are going to look like? Are we revising growth up and inflation up, unemployment higher? What's that look like? Not much of a change in growth and unemployment, but probably we're going to need to go up on inflation just by what's already happened. Just a nudge higher on CPI. The difference between the Federal Reserve and the ECB, though, is that they do that and they're not cutting interest rates on the same day.
Well, they weren't pre-committed. So
can you imagine? Can I just finish on that? Can you imagine if the Fed did what the ECB did last week? What do you think that would look like in markets?
Well, so the Fed historically has tended to have a very high bar for their first move. And the ECB, as you said, kind of locked in that first move early. The Fed has never really behaved that way. So it's hard to say, but yeah, that would have been interesting.
I forgot who wrote the article, but it was someone here at Bloomberg that referenced a reverse Trichet. So Trichet, for those of you that maybe aren't familiar, former ECB president, did a couple of hikes at precisely the wrong time. I think one was in 08, another series of them around 2011, around the Eurozone debt crisis. A reverse Trichet being ultimately, you've cut too soon, that the cut's the mistake this time and not the hike.
Well, we'll see. I mean, is that really the reason why the euro is weakening so much? Probably some other issues. But it's a good question, and it's something that people are going to be asking.
Yes, something we'll keep asking. Stephen, it's good to see you. Thank you. Santander's Stephen Stanley there, breaking it down on the Federal Reserve tomorrow. Mark McCormick's going to be sticking with us. Let's get you an update on stories elsewhere. We can do that this morning with Danny Berger. Hey, Danny.
Hey, John. Shares of Apple down just 0.1% this morning. At its Worldwide Developers Conference, the iPhone maker announced a new partnership with OpenAI. It also unveiled features called Apple Intelligence that will roll out later this year. And more advanced tools, those won't come until next year. Donald Trump will meet with Senate Republicans on Thursday. It's an effort to plot out his priorities if he wins a second term in office. Senate Republicans hope to win a majority in November, which would give them the power to push Trump's legislative priorities and cabinet picks. Trump has a busy schedule. He'll also be participating in a meeting with CEOs hosted by the Business Roundtable. Singapore Airlines has offered payment of $25,000 to passengers who sustained serious injuries during a flight that hit extreme turbulence last month. The payments would be to address their immediate needs, the carrier said in a Facebook post on Tuesday. They're also offering a $10,000 payout to passengers who sustained minor injuries. One person died and several dozen of the 229 passengers and crew on board were severely hurt on the flight that departed from London to Singapore. It was forced to make an emergency landing in Bangkok. And that's your Bloomberg Brief. John.
Danny, thanks for this morning. Appreciate the update. Up next on the program, we'll set you up for the day and the week ahead. Looking ahead to tomorrow morning for CPI, tomorrow afternoon for the Federal Reserve.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Sure.
Don't miss Bloomberg's interview with the
The opening bell, 42 minutes away. All-time highs at a close to kick off the trading week. Coming into Tuesday, equity futures down just a little bit today. We're off by 0.25% on the S&P. Got a bond market rally, though, for you. Yields are lower by 3 basis points. A 10-year 4.43 55 after yields climbed on a 10-year for 3 consecutive days. Pulling back on a 2-year too. We're down by 4 basis points at 483.61. Here's the trading diary for the week ahead. This is what it looks like. The Fed kicking off its 2-day meeting today. Wednesday, we'll get US CPI data, the Fed rate decision, Chairman Powell news conference. Thursday, PPI, and another round of jobless claims. Friday, UMich consumer sentiment plus a BOJ rate decision. Mark McCormick of TD is back with us for some final thoughts. Mark, data, central bank decisions, all super important. I want a word on politics, if we can. Mark, all of a sudden, politics, EM, India, DM, France, DM again, the United States later this year, the UK somewhere in between. How important is that going to be as a dimension of foreign exchange for you?
I think it's absolutely critical. It's one of the things we've been talking about for at least a couple of months now, and it's one of the reasons why we massively upgraded our dollar view for the second half of the year. I think a big piece of it is the market's really focused on Goldilocks, and as we talked about in the last block, there's a lot of things that need to go right, and there's only a couple things that need to go wrong. And I think a big piece is if you look at geopolitical uncertainty and geopolitical risk as an index, and you overlay that to FX volatility is extremely cheap. And the thing that we're seeing is that I think this works really well with the intersection of inflation, monetary policy, fiscal policy, because what we're seeing from any government, whether it's a left-leaning government or a right-leaning government, is they want to spend money. And we're in an environment where inflation is high. And what's very, very important for the FX market is that there's inflation divergence. And when you have inflation divergence and you have central bank divergence, that is a key ingredient that allows the currency markets to absorb what's happening in the market and trade off those types of themes. So I think all of this is kind of working together. And what the last week showed us is there's just very, very strong cracks that are occurring in Goldilocks. We just can't have this little macro vol with this much disruption and this much potential change. And I would say one final thing on the FX side is that the most important strategy that people are normally focused on is the carry trade. And a lot of the currencies you mentioned, especially Mexico and India, have been the darlings of either EM equities or EM-based carry strategies. And now what we're seeing is that the one thing that disrupts carry is volatility.
There's a lot to unpack there. You said you are massively overweight the dollar heading into the second half of the year. In the second half of the year, with the election in mind, you also see an opportunity being long FX volatility. Just park the volatility for a second. What's the thesis behind massively overweighting the dollar?
A lot of it is the intersection. So it's like the dollar is the vol trade for FX, in my opinion. So if you kind of run any kind of correlations of risk sensitivity to currencies, there's really no more safe havens. The yen is not acting like a safe haven historically like it did. The interesting part is that the Mexican peso and the Indian rupee were currencies that acted like safe havens. So what we're seeing is the correlations are changing and the market's evolving. So the dollar is still kind of the only place to go. I think a big piece of it, again, is that people have been focusing on the weakness in U.S. data surprises. But what we see is data surprises correlates very closely with our positioning model. So I don't think data surprises is telling us a lot about economic momentum because there's other indicators you can track that our models are still quite long the dollar. So I think a big piece of it here is that the macro fundamentals, in spite of the dollar weakness over the last 6 weeks, have actually improved on the indicators that we track. And the adjustment that we saw in the weak dollar story has really been just more about technicals, positioning and short-term valuations, which is what we capture in our model. So I think the second half of the story of the dollar is rooted in two things. The macro story in the U.S. is still better. There's still not certainty on whether or not the Fed can cut. And the U.S. election itself can be very disruptive for the seemingly important trade that everyone's focused on the last 6 weeks, which is U.S. data is converging with rest of the world data. And if you start talking about tariffs and fiscal stimulus in the U.S. and potential for volatility there, that's something that can disrupt the non-U.S. growth story.
So how big could this rally be and how disruptive could that be to markets that have been looking for some weakness on the dollar?
Yeah, so the way we look at it is, again, we idiosyncratically, we believe the BOJ is going to hike more than expected. We do look for them to actually start to talk about moving this week. So we do expect a hike in July. So the yen can actually kind of nestle itself away from the dollar a little bit and rally against other currencies. But we are looking for euro to break 105 and actually by the first quarter of next year get down to 102. So that's a forecast we've had now for about 2 months. So yeah, we are looking for pretty significant dollar strength based on the potential evolution of that type of feedback loop where it's Inflation is a little bit too sticky. It creates conditions where risk starts to sell off. Most of the currencies, again, outside the dollar, are heavily correlated with risk, and that creates a little bit of a negative feedback loop that feeds into a stronger dollar across the board.
Mark, as you were speaking and you were talking about how regimes were changing in foreign exchange, I was thinking of a few guests that have been on this program over the last year who were talking up the peso as like a haven within EM. And then dollar MEX just had this 8% move last week, just big breakout. And the weakness continues again this morning. If you believe we have that kind of dollar strength that takes the euro back down towards parity or close to it, Mark, where does it leave EM currencies like the peso?
I think the peso is unique. I think a big piece of the sell-off is, one, there was just a massive surprise from the events. And obviously, we've seen some reform agenda come from AMLO that's not exactly exciting for institutional investors. If you look at kind of like the largest holding of bond holdings by foreign investors, Mexico is always up there in EM. But I think a lot of this has to do with positioning, because as I mentioned, the most popular strategy in FX the last couple of years, best performing strategy has been carry, and any carry basket's got a very long overweight position in the peso. So I do think a lot of this, there's an overreaction. There are still decent fundamentals in Mexico. It's still got the nearshoring. It's still got connectivity to the US, which is a resilient and an economy that's doing okay. But the knee jerk here is that you're talking about constitutional reform. Essentially, Sheinbaum only needs to basically pull off 2 people to get a supermajority to make constitutional reform. And if you think about the agenda in terms of it moving in a direction that's a little bit less market friendly, that's something that is really scary for EM investors, particularly as we looked at what happened in India. And the peso tends to not do that well, especially because USMCA, the new NAFTA, will be up for renegotiation in 2026.
Mark, appreciate it, sir. Mark McCormick, thank you. Let's get to the lineup for tomorrow. Bob Dole, Crossmark, Bank of America's Savita Subramanian, PIMCO's Libby Cantrell, former St. Louis Fed President Jim Bullard. Stacked.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
From New York City for our viewers worldwide, I'm Matt Miller. We're looking to see if the fallout of Apple can drag the market along with it today. The countdown to the open starts right now. Coming up, stocks pulling back from record highs ahead of tomorrow's doubleheader. The Fed kicking off its two-day meeting. And Apple's AI plan is getting a lukewarm reaction from investors. Let's begin with the big issue, though. CPI is up next.
We see that trends in inflation are exactly where the Fed wants it to be. You know, I think we're probably going to see some of that data tomorrow, where the trends continue to point towards that lagged effects going to deflationary that allows them to have that, flexibility they seek. The market seems to be pricing in too. And we believe that, the data will show that at least there's going to be one. The question is going to be September or December.
Joining us now to discuss is Cole Smead, Smead Capital Management CEO, famous Warren Buffett acolyte, and in town from Phoenix. Great to have you here on the program, Cole. What do you think about the data that we're getting? Inflation looks like the acceleration we saw at the beginning of the year was a blip, and now we could come back into disinflation, and growth continues to be fairly steady.
Yeah, I mean, I feel bad for the Federal Reserve because they're dealing with a problem they didn't create. We're spending 7% of our GDP. We've never done that before with less than 7% unemployment. And as we all know, we're dealing with something closer to sub 4. So it's a situation where, we're trying to deal with the symptoms, but the ultimate problem is federal spending. And I don't think that's going to change with Biden or Trump in the presidency. It's very popular. I have a friend running for Congress in the great state of Arizona, and you cannot get elected telling people you're going to cut benefits. And ultimately, Social Security, Medicare, Medicaid, that's going to grow next year whether we like it or not.
Well, what does that mean to you as an investor? I mean, if debt and deficits continue to grow, obviously the carry costs are more expensive now than they were before, and there are no cuts or fiscal responsibility in sight.
Yeah, that's a good question. In our economics class, we were taught about guns and butter. That was the old, economics lesson of the 1960s and 70s. It ended up just being butter, ultimately. If you look at Vietnam, that tapered during the 70s, and Johnson's Great Society went on through also the Nixon administration. I think that's a very analogous way of looking at this economically speaking. It shows you it's on both sides of the aisle. The question is, are we done with the Fed in the longer term, whether or not we have a recession at some point and they have to lower the short end of the curve? We look at long-term borrowing costs. I think the biggest risk is the 10-year waking up at 6%. Now, I say that because that's a level that would affect the economy finally. And that's one of the bigger economic risks that we look at, 4 to 5 years. Think of things like mortgages, think of auto finance, think of corporate lending. That's when things would finally get lethargic. I think the one place that really is not dealing with that is the stock market. I mean, the stock market acts like there's nothing going on. There's not tight short-term rates, and it's chugging along on the back of a good economy. But like we said, it's bolstered by federal spending.
All right, I want to get over to Mike McKee right now, our international policy and economics reporter here. Did you have guns and butter in your economics class?
Oh, absolutely. Yeah. But that was the Lyndon Johnson era, too. Yeah. Guns and butter, Vietnam, inflation, and we saw what happened there. Tomorrow, we're not going to have much of a change in inflation. The CPI forecast, at least according to the median of economists surveyed by Bloomberg, as they say, will show a decline in the headline number that might be somewhat impressive, but it's not going to have an impact on the year-over-year number because of base effects. Core doesn't move very much either. So what is the Fed going to be looking at? Well, primarily, they will look at, as will we all, housing. What is happening with housing? I want to show you a chart here that tells this story very well. This is the harmonized inflation chart that shows U.S. CPI the way that the Europeans do it. Why did the ECB cut rates? Well, because their inflation rate is lower. Ours would be too if we didn't have the complicated way we measure housing. And you can see that here. The blue line is the way the BLS measures CPI, and the white line takes that out. So you could see why we're in different places, and what the Fed needs to see is that blue line coming down towards the white line. When will that happen? Well, go back to Jay Powell's news conference at the last Fed meeting, and he said, we don't really know. That's a problem for them because at this point, the exact timing of it, they've learned lags are longer, he said. We now think significantly longer than we thought at the beginning. And so while they're confident it will come down, they're not confident in the timing of that, which leaves everybody on Wall Street waiting to see what they say about timing tomorrow. The forecasts are at this point that December's the only thing that's baked in. November's a strong maybe, about 90%, but nothing before that really gets over 50-50. So does the Fed cut once? Does the Fed cut twice? Or does the Fed not cut at all this year? We might learn a lot at 8:30 tomorrow with CPI.
I'm sure we'll learn a lot either way. Mike, thanks so much for joining us. Mike McKee there, Chief Economics and Policy Correspondent. Cole Smead is still with us, Smead Capital Management CEO. What's your take on what the Fed is going to do? You said you don't want to be in his place, right? But he's got to do something, or I guess he could do nothing. Which do you think he chooses?
Well, I mean, if you look at actual loosening or tightening, things have got looser all the while we've had very tight short-term rates. So I think if you look at the money growth, think of all the talk of private credit right now, for example. That's loosening. That's loose policy. That's a lot of money sloshing around. So the question, I would use, Bloomberg opinion person Larry Summers as an example. Larry's been arguing that if you look at R&D and software as a percentage of fixed business investment, it's 37% of the economy. It's never been so high. We are less tied to the credit cycle as an economy in our capital investments for business, and therefore, call it the R star, if you go to the economics world, is plausibly higher because higher rates are what will finally affect the economy in a way that in the past, when we were more tied to the credit cycle, it was lower nominal rates that would affect us. So it's kind of like if this hasn't slowed the economy down at low fives, and this hasn't caused a recession, what short-term interest rate would is kind of the plausible question. You haven't ran into that yet. And so we think a lot about that. But, again, where that affects the economy is not on the short end of the curve. It's on that long end of the curve. That's where you'll actually see the economy change because, that would be where the long-term inflation expectations have shifted. We're not there yet. But if we sit here in 2 years and we still have the sticky inflation that isn't going away and we continue to ask why, I think you'll see people give up hope that the Fed can manage it. Again, that's not their fault,
right?
But that's what they'll have to deal with.
You seem to, though, at Smead Capital, be still placing bets on the consumer, on the economy. Amex is one of your top holdings. I'm looking here, Lennar, Simon Property, D.R. Horton. So in the housing sector, State Street, J.P. Morgan. Interesting that we saw PIMCO come out with a warning about regional bank failures in the U.S., saying that they expect, because of a very high concentration of troubled commercial real estate loans on their books, some failures. But PIMCO co-founder Bill Gross, he was on the close yesterday, and he said he likes some of the regionals. Take a listen.
I've bought some regionals today, KEY or Truist TFC or Citizens CFG. To my way of thinking, are very attractive investments for the immediate to long term.
So Cole, what do you think about the regional banks? I mean, he's picked some that he thinks are well reserved against any failures, but clearly CRE is a problem.
CRE is a problem. We started nibbling on the regional banks last fall. We bought Western Alliance, who obviously was in the tumult of last spring, Fifth Third and M&T. The better prices were in the heart of the last spring, to be downright honest. But to your point, being able to buy those at a discount to book, and those are businesses that produce over 10% return on equity. If you can do that in banks and they can sustain that level of returns, you make good money historically. I would also point out Buffett in the 2023 shareholder meeting, he pointed out to shareholders, if the Bank Holding Act of 1969 had never come about, I would have never gone into insurance. I mean, that's a massive statement. One of the largest insurers in the world. For him to say that, he was saying, hey, I find banks interesting, but I can't get highly involved. So I think that is an interesting arena, but here's a better way of thematically thinking about this. All these investors, people are taking too much risk in the stock market. I'll call it baby boomers that are in the 70-30 that are really sitting 90-10. what they're all trying to do is find an overly consistent business. And those things are very overpriced. If you go look at a lot of the staples, a lot of the consistent blue chips, they're stupidly priced, to be honest. So we look at this world as, it's like Buffett said in the 96 meeting, it's a lumpy 15 rather than a smooth 12. You're looking for a business that has more earnings volatility, but producing higher returns, and yet because it's not so consistent, people aren't wanting to give it a multiple. So that's why banks, that's why energy business, that's why malls, because they are lumpy, but at the same time, you're getting so much better prices for that lumpy level of return relative to the smooth blue chip consistency.
Looking for that value. Listen, Cole, I got a question coming in from a viewer for you. Kind of going back to the Fed, the difficulty that Jay Powell is in because of the data discrepancy. Viewer says, Cole, can you give us your thoughts on the difference between the establishment and household surveys in terms of the labor market?
Oh, that's a wonderful question. And Mike was obviously talking about this a second ago. I think we should scrap the owner equivalent rent. It's a terrible way to do housing. It's funny, we have like Redfin and Zillow, and we have these great services that want to provide all their data free because they want to proliferate their brand. And why aren't we using that data? It's publicly available. It's market-based data. So that's the one part I don't get. Why are we still sending surveys to people and saying, let's survey your prices? If you already own a home, you're not the marginal buyer. You're not shifting marginal prices. I find that to be really problematic. I would argue that OER was understated early in the pandemic. Now it's slightly overstated relative to then. And I think that, therefore you're not getting the real-time data. And like Mike was saying, that's going to affect how you calculate the CPI at any given time.
But can you look through that? Can you use Zillow and Redfin's data? Can you look through that and see a truer picture than the Fed can?
Yeah, I think the truest picture is tight supply. That's what the Fed can't do anything about building houses that are not there. So, did high rates incent builders to go out and supply the market? The answer is no. They've backed off on their numbers. So we went from a tight housing market with low rates to a tight housing market with high rates with less new homes being built. We will not end this with tight supply. You cannot ruin housing by having tight supply. It's like the capital cycle. You hear like Marathon and those guys always talk about capital cycle, and the reality is it's a capital cycle theory. With tight supply, that's good for the economics of the maker or the owner of that asset, and if you cannot oversupply the market, you can't really ruin the economics of housing. I don't think tight rates, like I said, are going to change that. I think one shift we can have in housing would be when a, call it a millennial or a Gen Z wakes up and says, you know what? It's not about getting a low rate. It's about fixing my rent so that future CPI effects on my rental will never affect me again. That zeitgeist where people say, what if this is an inflation hedge and getting it locked in now will help me? I think that will be the psychological changeover we see in housing. And that would be the only way you could really eventually alleviate the supply issue because people would get past the rate itself.
I mean, you're coming from Phoenix where we've seen housing booms and busts.
Yeah.
And what's that area like right now? I mean, it's a place where we've seen huge growth, where we've seen a ton of immigrants come in.
Yeah.
Tell us about Phoenix.
Well, we get immigrants from the great state of California primarily. So, and by the way, California.
Documented.
I was gonna say California bashing is one of our favorite sports too. So, to your point, I think Austin was #1, but we were #2. We grew our millionaires more than any other city as a percentage of what we had over the last 5 years. And I mean, it doesn't matter whether they're talking New York, Chicago, LA. We are just collecting a lot of people, but also a lot of wealthy people. We have a 2.5% flat income tax. That's crazy low. I came from Washington. I was one of those people that moved 4 years ago, not because of the pandemic, but again, not dissimilar to those people that made that transition. I've never enjoyed paying taxes in my life like this because what I get. To your point, the difference is it's not a well-established place, so the culture of it is still in the making. It's the youngest state of the lower 48. So I look at that. The main thing for Arizona, and I'll use the Odd Lots podcast. They had Chase Emerson on from Emerson Land Holdings. They talked about water and land, and the New York Times article saying they were going to run out of water. And I think Tracy and Joe did a wonderful job of fleshing that out with Chase, where they just laid out the fact that in Arizona you have to have 100 years of water rights to even get a permit. Okay, so the idea that these places aren't going to grow, they're going to grow a lot. Where are we going to grow? We're going to go in places like Arizona, Texas, and the South. Cheap land always drives housing. In the case of the West, it'll be cheap land plus water.
Cole, great having you on the program. Thank you so much. I hope you drop by next time you're in New York. Cole Smead there of Smead Capital Management.
We may have futures down a bit this morning, but we do have some notable stocks that are trading to the upside. Starting off with the shares of GM, the company has approved a $6 billion buyback. This on growth in their EV business, and it follows a 33% dividend boost from the first quarter. So all is well with GM. Turning to the shares of Lilly, they're also sharply higher after hitting a fresh record high yesterday. A panel did say that their Alzheimer's drug is effective and recommended it for approval by the FDA. And then finally, Spotify, after climbing more than 100%, unbelievably over the last year, Matt, this stock is higher in the pre-market. They are unveiling a new premium plan for $5 for current users that will allow for playlist, use of ease, and other audio tools.
All right, Abby, thanks very much. We'll check back in with you in a bit. Coming up, Apple entering the world of AI.
I thought it was a historical moment for Apple because this is really now, as much as we talk about the generative AI from an enterprise perspective, the consumer AI story is going to go through Apple.
We'll take a look at the future of Apple next and its partners. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
I thought it was a historical moment for Apple because this is really now, as much as we talk about the generative AI from an enterprise perspective, the consumer AI story is going to go through Apple. This was significant. I believe this will be a catalyst to an AI-driven supercycle over the next 2 years.
If you could make him out from that background, noted tech bull Dan Ives there from Wedbush, speaking to Bloomberg earlier on Apple's AI reveal, but not everybody shares his optimism.
Apple's typically not the first to a new product category, but they're also always the best. You saw nothing today that's better than the competition. You saw nothing today that's different from the competition, except marketing and a focus on privacy, right? So that's the difference here. They're not the first, but they're also not the best, and they're not the most advanced. They're here extremely late, and they showed up to the party without a gift, right? They didn't bring much new to the table here.
Joining us now is Bloomberg Tech's reporter Jackie Davalos out in San Francisco, back from Cupertino. Jackie, interesting take there from Mark Gurman. If he is right, that's a pretty disappointing WWDC from Apple.
You know, if you've been a Bloomberg subscriber to Mark Gurman's newsletter and have been watching Bloomberg, you knew what to expect. And sitting there waiting for this big reveal that really never came was a little bit, you know, it fell flat, and you could feel that in the room, especially when, you know, you had to sit through an hour and a half of these announcements of somewhat incremental upgrades to their operating system. And we were just waiting to see what the big deal was going to be with its AI features. Now, to give them some credit, Siri is getting a big revamp. The main thing here is that Siri is going to be able to understand what you're doing on screen so much better and actually be able to understand what you're saying in conversational language, so you can tell the digital assistant, hey, open up my text messages. Hey, can you look up a dinner reservation for me in my email? That, I think, was one of the bigger upgrades that actually surprised me for the better.
But they're doing it with OpenAI, right? Because it seems like they haven't got the ability themselves. So many companies out in Silicon Valley surrounding you have done an incredible job, right? From Google to Facebook. And why isn't Apple there at the table? Why do they have to license someone else's technology?
Because they were late to the party. You know, Mark Gurman's newsletter today really outlined how they were actually working on a lot of this generative AI technology, but then came along ChatGPT in 2022, and they really had to speed that up in a way that they were just not able to do. They take their time because everything that they release is just really perfected, it's polished, and so they're not going to release something that isn't ready. And frankly, they needed to show their consumers something, and they had to have the help of OpenAI to do that. Now, they're going to look for other partners here. They were very forthcoming about that in a separate presser with some journalists, that they're going to seek the help of Google and Google's Gemini. They were also in previous talks with Anthropic. So this kind of admission that they can't do it on their own is pretty unique, but just exactly how they bring their own technology to the table, I think, could be a game changer, because like Mark said, they're never usually early to the party, but when they do release something, it ends up not disappointing.
One of the interesting, I think one of the most interesting things was not an Apple announcement, but Elon Musk's response. He says if they integrate OpenAI's technology at the operating system level, he's going to ban Apple devices, from his physical businesses? Is there a possibility that he's going to stop offering CarPlay features in his Teslas?
It's hard to say what Elon is thinking when we just have to kind of take his tweet for his word these days. But what we do know is that Apple really emphasized privacy. They made sure to tell users that if Siri is pulling something from ChatGPT, it's going to ask for your permission, and it's not shipping data off to OpenAI unless it tells you about it. There's going to be an opt-in feature for these new tools. Now, Elon Musk, let's remember, has his own competing AI company as well. There might be some motivations that aren't totally clear in the tweet, but it's sure, you know, he was quick to enter the chat on the heels of this announcement, and he's probably not going to be the last.
Jackie, thanks very much. Jackie Davalos, tech reporter out of San Francisco, talking to us about Apple and Elon Musk. Coming up, we're going to speak with Victoria Fernandez of Crossmark Global Investments at the opening bell. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Taking a look at futures, we are down across the board, but of course coming off from the record highs where we closed yesterday. Time for our morning calls now. We'll look at some of the analyst recommendations on Wall Street this morning. First up, JP Morgan downgrading Cleveland Cliffs to a neutral. It's a hold equivalent. The firm sees weakening fundamentals, growing CapEx needs, and a lack of near-term growth for the steel producer. Next up, Comcast gets its only negative analyst rating. Exane cutting the company to an underperform. That's a sell equivalent, saying it's at a tipping point. And finally, D.A. Davidson is upgrading Apple to a buy. The firm says that the AI capabilities that were shown yesterday will be leading to an iPhone upgrade cycle. I guess you have to have the 15 Plus or the next one, the 16, in order to get the goods that we saw at the Worldwide Developers Conference yesterday. Coming up, Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments, joins us. We'll talk to her about what we should expect from the Fed and CPI tomorrow. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close
Welcome to Balance of Power. This is Bloomberg.
This is the countdown to the open. I'm Matt Miller. We are moments away from the start of trading. Futures are down, but after we hit another closing record high yesterday, 53.60 on the S&P 500 as the index rose into the close. Right now, we're just listening to the opening bells and watching the trading here commence. Futures, you can see off S&P futures down about 0.3%. We've seen Apple fluctuating. It's definitely one of the stocks that we're going to be watching today. First off, here's the euro. 107.23, so holding at that 107 handle. The 10-year at 443, 445, and NYMEX crude at 77.62. Apple really a big one to watch, although maybe not a big mover today. It's been bouncing back and forth around the zero level. Right now, up about 0.5% at the start of trade, $1 a share to 194.35 after introducing its AI for the Rest of Us plan yesterday. It says it's going to team up with OpenAI and others to make Siri smarter. You can see Google rising as well there, about $1 to 176. Get over to Abigail Doolittle. She has more on these two Mag 7 members.
This is an interesting one, Matt, because yesterday for Apple, it was a bit of a sell the news moment after that Worldwide Developer Conference 2024. Yes, they're firmly in the AI game, but as Matt Gurman said, they really didn't bring a gift to the party per se. Nothing so exciting. I mean, if a partnership with OpenAI is not going to get that stock to rally, I'm not quite sure what will. But today we do have a little bit of a relief bounce, up 0.6%. From a technical standpoint, though, Apple firmly hitting up on resistance. It's going to be interesting to see whether or not it can break out of a roughly year-long range. Over that last year, up just 5%. Alphabet, on the other hand, Matt, over the last year, up closer to 40%. Some analysts are saying that Apple's lack of real news at that conference, good news for Alphabet. At least that is what Morgan Stanley's analyst Brian Nowak is saying, that he came out of that WWDC keynote feeling, quote unquote, more confident in the AI leadership of Alphabet's Google and the continued relevance of the company's core search product, because of course analysts have been fearful that AI was going to take something from Google search, but it seems that we don't really have to worry about that, at least quite yet.
Yeah, Apple, as you said, kind of a sell the news trade yesterday. It was off. I couldn't decide whether that was just disappointment with what happened or whether or not people had been buying the shares into the Worldwide Developers Conference. How does the chart look?
I think it's exactly both of those factors, Matt. That chart is really pretty striking in the fact that over the last month to 6 weeks, the stock had rallied 20%, maybe into the conference, hoping that there was going to be some sort of a big announcement. It was satisfactory, but it wasn't an over delivery, so they sold the shares off. Given the fact that it did hit up against resistance right below $200, it really seems as though Apple or something macro, it could be the Fed, will have to come in to help the stock go above that resistance. If not, very likely to go right back down into the range. And of course, when that happened last December into the April bottom, it was almost a bear market. So stay tuned. There could be some more volatility ahead for the S&P 500's second largest member.
You know, one of the Apple, I mean, if you listen to Bloomberg Surveillance on the radio, Paul Sweeney is always asking Apple to give more money back to shareholders. It's not coming out the way he wants it to, but General Motors yesterday, Abby, approved a new $6 billion buyback plan after completing a $10 billion buyback plan that was approved last November. Those shares rocketed up 4%. I guess the EV business is doing a little bit better than expected, and they're up again today.
That's exactly right. The stock up 1.7%. GM doing very well, and that the green business, the EV business, they're citing growth there. So they really are able to do that financial engineering and return money to investors. That 33% dividend that was boosted by 33% in the first quarter. And then this $6 billion buyback, investors really like it. Those shares up 1.6% after that rally yesterday you talked about.
All right, Abigail, thanks very much. Abigail Doolittle following the stocks for us. Joining us now to talk more about the broader market and the economy is Victoria Fernandez. She is Chief Market Strategist at Crossmark Global Investments. Welcome to the show, Victoria. Thanks so much for joining us.
Yeah.
We have obviously a big day tomorrow with the Fed and CPI. Why don't you tell us first off your take on inflation and how that plays into your investment strategy.
Yeah, so I think inflation is probably stickier than what most people think. When you look historically, look at the 25 years prior to COVID, the pandemic, you had service inflation at 3%. You had goods inflation down around 0.2%. So I think when people look at the difference between the two, and you look now and say, well, we should be right around where we are on the services side. And that's where everyone is so concerned that it's not coming down. It's the goods inflation that needs to come down some. And how is that going to happen? Well, I mean, we've got to have more globalization, and I don't think that's where we're headed right now. So when
higher rates. I mean, higher rates would bring down goods inflation,
Yes.
right? If I had to pay more on a loan to buy a car, I would probably buy a cheaper car or maybe skip that
That's
for now.
exactly right. And when you look at the consumer, I mean, the consumer's driving this economy, right? And you don't want to get in the way of the momentum that we're seeing right now. But so many things are out there saying, hold on, this economy has got to slow down, consumer demand being one of them. Non-discretionary inflation is what people are looking at. But you look at discretionary inflation versus non-discretionary, 6% year over year for non-discretionary. These are things people have to buy.
Right.
They don't have a choice. That is hurting the consumer. So for our investments, we want to have some diversification. Do we have exposure to these big growth names? Yes, of course we do. But we're adding to the value side, to some of the staples names, because we do think we're going to get a pullback, whether it's a recession or not. It seems like the consumer's hanging in there,
Yeah.
but we definitely think we'll get a weakening
I
economy.
mean, even discretionary purchases, I look at car sales all the time, and they just continue to march higher, even with prices at these levels. It always stuns me. Nonetheless, the Fed is not going to raise rates, right? I mean, the bar for a hike is much higher than the bar for a cut. What do you expect from Jay Powell and co. tomorrow?
I don't expect much in this meeting tomorrow, except for I think Powell will try to push back on the market in regards to when the first cut is going to be, because we've had 4 central banks already come in and do cuts, ECB the latest one. But I don't think just because we had one cut that we're all of a sudden going to be all in on an easing cycle. You know, we tell our clients, like when the market does well, you trim some of your positions. I think that's what central banks are doing. Let's trim a little bit of where we are and then wait and see. I think it will be interesting to see if Powell focuses more on inflation or on the labor market. That might give us a little bit of clue as to the timing. Our investment committee is a little split on when we think that first rate cut will be, but either September or December is our outlook. I think look next year for more of your rate cuts to come into play, but be careful what you ask for, right? Yeah. Having the Fed lower rates means the economy is weakening.
Right, but if we only get one rate cut, I think you're right in that they can afford to do it. That's what the ECB did. We've seen the Bank of Canada do that. What does your investment committee like right now? What stocks do you buy, or what assets do you buy dealing with this period of uncertainty, which, by the way, we see in the data as well, some pointing higher and some pointing lower?
Exactly. So you want companies that you know can withstand the volatility that's going to be in the market. It doesn't mean it's one sector in particular. So you're digging into those balance sheets. You want good cash flows, right? You want return on equity. You want sustainability and predictability of earnings. So names we like. Healthcare has really taken a hit over the last year. So a name like Cigna we own in our portfolios. We like names like that. We like exposure to American Express or Visa. We know the consumer's looking to slow down, but you look at the balance sheets of these companies and the cash flows they have, return on equity of 35, 40%, plus they pay a dividend. These are the types of companies you want to continue to have in your portfolio.
What do you think about the regional banks? There was a warning out from PIMCO today. Some of them have too much exposure to commercial real estate. The home builders, right? Real estate is the only S&P industry group that's in the red this year. Right. What do you think about that whole area for the consumer?
So if we get rates coming down on a sustained basis, then I think real estate is an opportunity you could look at. Like REITs will start to do a little bit better there. But there is some concern. And you look at the housing market right now, housing leads CPI by about 12 months. We're seeing housing prices continue to move higher because supply of existing homes is so low. So to me, that means it's probably not going to be an area of growth anytime soon. No one wants to trade in a 3% mortgage and go get a 7% mortgage to replace it. So I think those are areas you have to be cautious in, and a lot of it is going to have to do with where rates go. If we stay in this
4% to 4.5%, 4.60 range for a while, you're probably not going to get a lot of movement in those areas.
Bill Gross was on the close yesterday talking about a wide gamut of things, but one of them is MLPs. He always comes back to that. He loves those MLPs. And you're down in Texas,
yes,
right? What do you think about MLPs? What do you think about the energy patch right now?
So obviously being in Houston, we have a lot of exposure to the energy sector. And I think because of some of the pullback that we've seen there, you have an opportunity to get into some of these names. We like those involved in transportation. You know, it's difficult sometimes on the production side, but because the U.S. is producing more, because we're exporting more, and because you have such strong balance sheets, we go back to the balance sheets, the cash sitting on the balance sheets of these companies, this is where you can invest and put a little bit of money to work. We saw Brent go back above $81. WTI is close to, what, 78, 79 this morning.
Yep.
Obviously, you can have some geopolitical events that cause some volatility there, but I think based on what the U.S. is doing, I think you can put some money to work in those areas.
We were just talking to Cole Smead. He's out in Phoenix, obviously a big fan of the economy there. They moved there from Washington. You're down in Houston, as you mentioned. Isn't it hard to do business when your energy grid continues to collapse? I mean, isn't that an important part about doing business?
It's an important part of everyday life, right? Yeah. To have that going. And yes, we did have some issues a couple years ago when we had the freeze. And I mean, I left Houston a few days ago. It's mid-90s. It's hot there. Lots of air conditioning that's running. But it's a great state for business. And it's the infrastructure component that we have to continue to build out. I think we'll see a lot of work in that area, especially as we've had so many people move into the state. So we've had more tax generation coming through. That can help with some of the infrastructure issues. But it's a great place to live and to work. So we're going to tell people to come on in.
All right, Victoria, thanks so much for joining us. Really appreciate you coming up to New York and joining us on the close. The close. I've been watching Romaine. I've been watching Romaine and Alex and Scarlett. Their relaunch was fantastic yesterday. Recommend you tune in again at 3 o'clock today. Of course, this is The Open. Coming up with small business optimism at its highest level this year, we speak to Chase for Business CEO Ben Walcher on how owners need to cycle-proof their businesses. This is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, The moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
U.S. small business optimism edging higher in May to the highest level so far this year, with firms growing less downbeat about the economy's prospects. And we also just got a couple of headlines from the World Bank upgrading its outlook for U.S. GDP growth to 2.5% from 1.6%. They're upgrading their entire outlook for global growth to 2.6% from 2.4%. So it seems like the economy is ticking along. We got a great jobs number last Friday, better than had been expected. Let's talk to somebody who represents small businesses in a great way. Ben Walter is Chase for Business CEO, and he joins us now to talk about small businesses and the U.S. economy. Ben, we continue to get signs of optimism here, even with the Fed above 5%. How do you gauge the U.S. economy and the speed at which it's running right now?
Hi, Matt. It's great to be here. I would say a couple of things. First of all, you know, we look at it from the perspective here at Chase for Business from small business. I think overall you see businesses looking inward saying my business is doing okay. Generally, they're pretty optimistic about their own prospects. There are some things that are cautionary. I would highlight, if you look at the NFIB survey that just came out that you referenced, it did tick up, but it's still running along at sort of an all-time low in terms of the range. And that's because they say my business is doing fine, but I'm worried about the world out there. And you know, everybody knows that uncertainty is the toughest thing for business, and we still see a lot of concern about uncertainty out there. Inflation continues to be a worry, but in particular, inflation with respect to wages. Workers are still demanding more wages. I understand why. It's tough out there. Costs are going up. But wages are an input cost to small businesses. They're not as well equipped as large businesses to handle it. So there is some caution to temper that optimism.
So we're still feeling the kind of vibe session that was last year's word for it, because we have growth, but you're telling me business owners are concerned. I know from the NFIB survey, 22% said their main concern was inflation, 20% said their main concern was labor. How do you hear it from the small businesses that you represent, that you work with?
Exactly the same as that. I mean, these themes have been out there for a long time, longer than we thought they would last, and they still are out there in terms of the things that small businesses are concerned about. So we do see that caution. However, I would say that it varies by industry. So if you look, for example, there are things that did particularly poorly during the pandemic that are now doing quite well, at least from a demand perspective. Demand for restaurants is off the charts. Now, their costs are high, but they're seeing strong demand. Anything having to do with home improvement, seeing very strong demand, very strong performance from small businesses. On the flip side, take a look at something like trucking. You know, you saw a surge in trucking investment during the peak of the pandemic, when so many goods were being rushed around to people's homes. And now there's a bit of a glut of supply, and so you see more slack there in the supply-demand equation. So it depends really on where you sit in the economy as to what kind of pressure you're feeling.
So small business owners worried about inflation. Their employees are asking for higher wages. They're raising prices, I guess, too. It doesn't feel like you think that disinflation is continuing.
I think it is, yeah. I mean, it's at a slower pace than it was before, but, you know, I'm a big fan of when people tell you how they feel, we should believe them. And they're telling us that the increase in producer prices are still a squeeze on their margins. So look, I think the demand is still there to offset it for the moment. So their margins are getting squeezed a bit, but they still feel growth. You know, at least a third of them tell us they want to borrow and invest. 2/3 of them tell us that their business is performing acceptably, if not well. And so I think overall, you know, we're sort of in that Goldilocks space for the moment. if nothing throws that off track. They are concerned about interest rates, although I remind people, often that these are sort of more normal interest rates, not high interest rates, and that their business models need to adjust to interest rates that are anywhere in the 5 to 7% range, because that's sort of in line with long-term averages.
Right, and you said, what, a third still want to borrow and invest, so they don't feel like, or you don't see these interest rates as being restrictive?
They are restrictive relative to where they were before, certainly, but I don't think they're restrictive relative to the places where people see demand. And the other thing I would say, Matt, is we still see business formation ticking along at a rate that is well above where we were pre-pandemic. It spiked in 2020, it came back down in 2021, and it's now settled at a pace that is still significantly higher than 2019. And not in the way that we see, if you look, whenever we see an economic downturn, we see a spike in business formation. That always happens. But this isn't like that. This is month after month at a steady rate that is about a third higher than it was in 2019. And that does bode well for the economy.
What are the size of the businesses that you serve? How many do you serve? And how important is tomorrow's decision to your business?
Look, I serve businesses that are generally between 0 and $20 million of revenue. We serve about almost 4.5 million of those businesses, about 4.2 million of those businesses. So it's quite large in terms of its penetration, in terms of our penetration into the economy. I would say tomorrow's decision, for our clients, they need to be able to run their business throughout the cycle. So one individual decision, if one individual's decision is going to make or break a business, that business is running along at a pretty perilous clip anyway. We advise our clients to be able to handle a range of scenarios. They typically can, and they invest through the cycle in a way that's sustainable. So I don't see them hanging on every twist and turn that the Fed takes.
Ben, just want to ask you about regional differences, because we've had a couple of guests on today from Arizona, from Texas. They talked to us about the growth they see in Austin, in Phoenix. Are you seeing big regional differences across the country?
We aren't, and we look hard for that. Look, I'm from Texas. I live in New York, so I understand that it's a different business environment. I'm sure there's a lot of people out there, touting the success of their own area. There's a bit of net migration, but ultimately we see strong business starts in Texas and Florida, and we see strong business starts in New York and California, and we see some of our best growth in those states as well. So we really don't see the regional differences at the small business level that you hear about, maybe from the overall GDP story. We see health across the country.
Fascinating stuff. Great intel, Ben. Thanks so much for joining us. Ben Walter, Chase for Business CEO, serving, as he said, 4.2 million small businesses between 0 and 20 million in revenue across the country, and they see health no matter what region they look in. Now, for some of the sector price action this morning, let's get over to Abigail Doolittle again. Abby, what do you see in the sectors?
This is pretty interesting, Matt, because right now we have a decline for the S&P 500 of about 0.6%, so the worst day of June. It is a broad-based decline from a sector composition. 10 of 11 sectors are lower. Financials down the most, down 1.3%. Then industrials, utilities, consumer discretionary. So you really are not getting a break. And it's interesting because yields are down. A lot of those are sectors that should trade higher when yields go down because their dividends look better, but that's not the case. Tech hanging on to a tiny gain of 0.1% or thereabouts, with Apple and Nvidia higher, but on the other hand, leading to the downside, Microsoft, JP Morgan, and Tesla. Let's dig in just a little bit more to utilities, because on the year, they are sharply higher, one of the best years since 2021, or the best year since 2021. But from the recent peak, down more than 5%. This is over the last 7 days, down 3.7%. Today, down. It's not entirely clear why, but nearly all the members today of that index are lower, led by Nextera. Apparently, they reaffirmed numbers, but investors not liking it. So weakness right across the board here from a sector standpoint, Matt.
All right, really interesting stuff. Nextera, interestingly, one of the stocks that Bill Gross mentions he likes and owns when he was talking with Romaine, Alex, and Scarlett on the close yesterday. Abigail Doolittle looking at the sectors for us. Coming up, the market-moving events you need to be watching today. That's next in our Trading Diary. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg.
Time now for the Trading Diary, what you need to be watching this week. The Federal Reserve, of course, begins its two-day meeting today, and tomorrow we're going to get all the specials on that. Oracle reports results after the closing bell, so stay tuned to see how they're doing. Tomorrow we're going to obviously get CPI data as well. Those are really the two twin events that you need to be watching, plus the rate decision at the end of the two-day meeting. On Friday, we're going to get the University of Michigan consumer sentiment data, another read on how the people feel that this economy is doing. This has been the countdown to the open. I'm Matt Miller. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
DOJ or other authorities
could face bigger challenges next.
Was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find the video feed of this Bloomberg Intelligence program. Alex Steele is out today. Sitting in for Alex is Jess Metton.
It's going to be fun.
So yeah, we got you for the next couple of hours. Thanks so much, Jess, for sitting in for Alex. Busy show coming up here today ahead of the Fed tomorrow. We're going to check in with Ira Jersey. He's Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. We're going to get his thoughts on what he thinks this Federal Reserve will do. And then we're going to talk to whether folks are going back to work full-time or is hybrid the new normal here. Robin Erickson, Vice President for Human Capital for the Conference Board. She's going to join us. They did some survey work done. Angelo Zeno, Vice President and Senior Equity Analyst at CFRA Research, to discuss Apple's conference yesterday, the developer conference, where they really stepped up their AI game. Is it enough for Apple to become and remain a player in AI? So we got a lot to cover coming up in this hour. We'll be here for the next 2 hours, Bloomberg Intelligence. But first, let's kick it off with Amy Morris and a Bloomberg Business Flash.
Thanks so much. Markets are lower. Traders waiting for tomorrow's final read on consumer prices, hours before the Fed issues its latest policy decision for the month of June. Right now, the S&P 500 is down 0.5%, NASDAQ down 0.2%, the Dow down 0.9%. The 10-year Treasury yield at 4.44% and the 2-year yield at 4.85%. NVIDIA shares trading higher after dropping as much as 3.2% yesterday after its 10-for-1 stock split took effect. NVIDIA shares now on track to snap a 2-day losing streak. And European assets extended Monday's losses. Jitters over political upheaval in France continue. The euro now down 0.4%. It's at 107.22 against the dollar. Market drivers brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of more than 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. And that's your Bloomberg Business Flash. Paul and Jess.
Amy Mars, thank you so much. We appreciate that. Jess Metton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So, Jess, I guess we get the Fed Day.
That's right.
Tomorrow.
Day one of the Fed meeting starting today, but of course, all eyes on the decision tomorrow afternoon. And this time, we will get not just, obviously, we always get comments from the man himself, Fed Chair Jerome Powell, but we'll also have the quarterly economic projections at this meeting. Right. So that'll include the dot plots.
Okay.
So an update there. But we do know those can be volatile and change from time to time. But we'll be watching to see if the last dots that we got in March, because we get them every other meeting, those had a projection for 3 rate cuts by the end of this year, but it was hanging on by a thread. Okay. Right. So it might most likely, Neil Kashkari was talking about how most likely it would be 2 in these dots.
Right. Well, DOTS is the function on
That's
the Bloomberg
right.
terminal. Tom from the 5th floor, thank you for thinking of that way back in the day. So we've got a sell-off here in the markets here. The S&P off 0.5%, the NASDAQ off about 0.2%. Norma Melinda joins us. She covers the equity markets for Bloomberg News. She joins us here in our Midtown Manhattan studio. Nora, what are you looking at today in the markets?
Well, let's take a look at a name in the green. Of course, really topical today, Apple. And this is coming after it rolled out its plan, AI for the Rest of Us, during WWDC, its Worldwide Developers Conference. And this is really interesting because everyone's really watching to see how Apple can really play a role in this AI battle. It's like all these companies are in the ring and we're trying to see which one's going to win and take the others out. But here, it was really interesting because it was nothing too different apart from marketing and a more of a focus on privacy, and especially with this plan to work with OpenAI. We do have some investors that weren't too thrilled by the idea that they're not rolling out their own technologies, but more or less relying on another company to kind of push things through. But I mean, we are seeing the stock coming back right now. It's at its highest intraday level on record. We're seeing shares up as much as 3.5%. So I think people are really thrilled by this new revamp. Apparently, Siri is actually going to be able to fully understand some of our commands.
And also, if you look at Apple stock, it's trading not far off of that December record highs. So that's something to keep note. But I'm wondering, Paul, are you going to upgrade your
I have
next
to. I mean,
iPhone?
Apple iPhone 11, and Gene Munster from Deepwater Asset Management, we were just chatting with him. He basically scoffed in my face. In fact, I'm still using an Apple 11. So this will be an excuse for me to upgrade when they come out with the new phone in September. And I think that's what Apple is counting on, is knuckleheads like me upgrading and to try to take advantage of some of these AI capabilities.
Definitely.
So Gene Munster from Deepwater, he was positive. We also spoke to Dan Ives from Wedbush Securities. He was also, not surprisingly, very bullish on what we heard yesterday, even though some of the folks were saying, not too much. But again, as you mentioned, the stock is up today as people are digesting.
Actually, looking at this, it's actually trading at records now. It just eclipsed its December high.
Yeah, so how about
I mean, no one's gonna. Are people ever gonna stop buying Apple? I mean, I just think that they're such a premier company, especially when you think about the consumer. Such a company, you know, a family name.
Upgrade as much often as we
used to, right?
Day, it was almost every year.
Hence you sitting here with the 11, right? We're on the 15.
Exactly.
I held on to the 6 for a long time. It was one of the last ones with the home button.
Now that's a good one.
Yeah,
that is a good one.
But that was a good excuse for that one. But eventually, I was forced to upgrade.
All right, how about our good friends at Eli Lilly?
Yeah, so we are seeing this stock lower, but I did want to point out some news that came through yesterday. So the FDA advisory panel actually unanimously voted right before the closing bell yesterday that Eli Lilly's Alzheimer's drugs benefits outweigh its risks. And of course, the FDA has really been under fire for its approach to its Alzheimer's treatments. It's still unclear what the role, the protein that a lot of these drugs are targeting play in the disease. But if approved, Eli Lilly's drug would compete against a lot of competitors like Biogen's drug, which received clearance last year. We're seeing shares down as much as 1.5% in trading today, but this is really interesting, especially with the FDA expected to make a final decision on this Alzheimer's drug by the end of this year.
Boy, the stock had hit a 52-week high earlier in the session, so it's been some pretty volatile trading here in the market.
And it's been just climbing at a record high for months now at this point. If you look at the chart, it's insane.
GM buying back shares, right?
Yes, so we are seeing, it seems as those investors are actually getting some money here. Of course, that's what everyone loves to hear from an investor standpoint. But it authorized a new $6 billion share buyback plan. It's citing improving profitability in not only its primary business, but growth in its EV department. It plans to, quote, opportunistically buy its stock under the new program after completing a $10 billion accelerated share repurchase that was approved last November.
Buybacks. You know, Bank of America, their corporate client data tends to come out on Tuesdays. So Jill Carey Hall over there just put this out. But buybacks among their corporate clients last week were among the second largest in Bank of America's weekly history since 2010. Wow. So it's a stat there that came out this morning from Jill Carey Hall.
Well, GM, I mean, now it's at a 52-week high. It's up 33% year to date. So it's had a heck of a move. And I wonder if it's tied to the fact that GM and the other auto manufacturers are actually backing away a little bit on the margin from EVs. That means, you know, presumably lower losses tied to that and greater profitability. I wonder if less EV is better for the stock. It seems like.
Yeah, I mean, we're seeing the stock at an intraday high, its highest since 2022.
All right, very good. So some big names there: Apple, Eli Lilly, and GM, all moving in today's market and in what is generally a down day. Norma Linda, thanks so much for joining us here. Norma Linda, she covers all the equity markets for Bloomberg News, joining us here in our Bloomberg Interactive Brokers studio. Tomorrow, again, all eyes turn to the Federal Reserve, as it tends to do from time to time. We have the statement coming out at 2 p.m., press conference at 2:30. Michael McKee, Bloomberg's own Michael McKee, probably hopping on the Acela later this afternoon, heading down to D.C. so he can badger Fed Chairman Jay Powell.
That's right.
In our studio today.
This is so exciting.
This
the
is
suspenders
unbelievable, people.
with the soccer.
He must have found the New Jersey Transit train station, which he lost, forgot about for a long time. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. In studio with the soccer ball suspenders, which Jess loves.
It's great.
Ira, I guess tomorrow our expectations should be low for market-moving news coming from the Fed. Is that how we should approach it?
Well, not necessarily. You know, there's the possibility that the Fed will shift its thoughts, not only for this year, but more importantly, at least from my perspective, will be the 2025 and 2026 dots.
Okay.
So if the Fed were to move those up because they think that maybe the economy is going to be a little bit more robust, they won't have to cut interest rates quite as aggressively as the prior dot plot from the March meeting, then the back end of the yield curve in Treasuries could potentially actually move quite a bit. We don't see liquidity isn't great right now in the Treasury market, so you can easily have a 10 or 15 basis point.
Liquidity great? It's the biggest market of anything in the world.
Well, but that's the reason, right? We've been issuing a whole lot of debt, and there's only a limited number of buyers. So just because you have a lot of debt doesn't necessarily mean that there's going to be an equal number of buyers out there. So it's not that the market's not owned, right? So the Treasury Department issues bonds almost every week now, but basically all the time, and those get purchased. Now the question is, in the secondary market, how easy it is to sell those bonds into the market, and is there a natural buyer on the other side? And the answer is sometimes yes, but occasionally, in order to find those buyers, the price has to move quite significantly to entice people into the market.
What do you think bond investors want to hear from Fed Chair Powell versus what you think we actually will hear in his commentary?
Well, bond investor, if you're long, you want to hear them say that, hey, we're going to cut interest rates, starting in July, and that's certainly what the longs would like to see, right?
Yeah.
We're not going to hear anything like that. In fact, we might just hear the opposite, and I think that's one of the reasons why the people in the Treasury market have been pretty cautious. Positioning is now much cleaner. You had a lot of people who were short. They kind of exited those positions when we were actually near current levels, or even with yields maybe 10 or 15 basis points higher. But the sell-off they think is constrained because it does seem like the Fed believes and is trying to convince everyone that at some point we're going to cut interest rates. So it's going to be hard for sell-offs to be maintained for a very long period of time. Particularly now, going back to that supply story, the Treasury Department is not issuing more debt than it had been before. The issuance pace is basically constant, whereas you go back 9 months ago, they were continuing to increase the amount of debt that they were issuing, and that's actually slowed down quite a lot.
What does a government bond trader do today before a Fed meeting? Do they make sure they're flat, they're fully hedged? Do they play their gut and go long or short here a little bit? What do they typically do?
Yeah, that's a good question. So I've talked to some folks on the sell side in the last couple of days, and a lot of them are just confused. So they are relatively short, or relatively flat, I should say. That being said, if you look at the positioning data, so the Federal Reserve every single week actually polls the dealers and gets the primary dealer positioning data.
Now, are they honest when they're responding to that?
Well, they have to be.
Okay.
Yeah. I mean, because if they're audited, when they're audited annually by the Fed, if they don't do their job, they're get in trouble. But dealers in aggregate are as long treasuries as they've ever been. It's almost record longs in terms of the notional amount outstanding. So dealers are long, but on the other side, they're also not quite record short, but they're hedged a lot with futures. So it's like they're long the cash and they're short the futures. So they're in what we call a basis trade, where they're playing some relative value, not taking a ton of risk, but they still have a lot of cash cash securities that they have on their books.
I track a lot of the big banks and obviously their outlooks for when the potential of the first rate cut could happen. So Goldman Sachs, for instance, over the weekend, they still reiterated that they were thinking it was going to happen in September, but then they thought a second cut would happen in December rather than November. When you're looking at the bond market, what is that really telling us as far as what the consensus on the potential timing is? But because it is an interesting dynamic, because you have September and then November, actually that interest rate decision is the same week as the election. So the meeting starts that Wednesday, not that Tuesday.
Yeah, they actually moved the meeting to avoid the election. So the meeting now, the release will be on Thursday. Okay. Be the first time we've had a Thursday release that I can remember. And I've
quite
been doing
some
this
time.
For 20 years.
So not a lot of people have been looking that far ahead to the calendar, but I have it circled on my desk. So I wanted to ask you your thought process about the timing there.
So I actually suspect at this point the Fed, unless the CPI data really comes down massively and we start to have job losses in the next 2 months, which doesn't seem likely, I doubt that the Fed's going to do anything prior to the election. So I think September, while it's not a 0% probability, I'll almost never say that, but although tomorrow's a 0. Well, I think that it's very possible that if the Fed starts to cut rates, it'll be in November or December. And there's a growing possibility in my mind that the Fed might not start cutting rates at all this year, right? It might not cut rates until 2025 because the economy, even though it's slowing, is still reasonably robust. When you look at a lot of the preponderance of the data that we look at, particularly the hard data like retail sales and even the job market, although Anna Wong and our colleagues at Bloomberg Economics certainly see some cracks there as well.
What is it about September in particular why you're seeing kind of more firms expecting it that month in particular versus others?
Because they're just moving it from July.
Right, so you keep pushing it out.
Right? Yeah, they're just pushing it out. I think that the Fed, they'll always say that like we'll do what we have to do regardless of the election. This would actually be the second closest to an election that they've made an initial move if they were to move in September. They basically would say to themselves, they'll never say this publicly, but hey, why don't we just wait 6 weeks? Realistically, we don't have a lot of data, and if the data is not absolutely crashing, there's not a fundamental need for us to cut this moment. We could just cut a little bit faster later.
Once they do start cutting, what happens then? Do they cut every month, every other month, like 25 basis points, 50 basis points? Does the 5.5% discount rate go to where? I don't know.
Yeah, well, it would depend on the economic situation, but at the end of the day, I think they would like to cut in 25s. And certainly that's one big reason to look at the 2025 and 2026 dots, because that'll give you a hint as to the pace, right? So at this point, it looks like every other-ish meeting is what they're thinking that they'll cut.
What's a big soccer story out there in the world today?
Oh, well, Real Central New Jersey has a home match tomorrow, so we have our beer garden getting ready. And
where does Real Central New Jersey play the matches?
We play at Rider University.
Yep. In Lawrenceville, New Jersey.
Yep, which is right in between Princeton and Trenton. So we get we've gotten pretty good crowds. We actually have record attendance this year, so pretty excited about that.
And who do you play?
Tomorrow we play Lehigh Valley United Rush, which is
and where do you get your players?
Almost all of our players are Division I collegiate athletes.
Does Paul, do you want to join in?
No, God, no. I might join in on the beer bash.
I've been joked around about that, and I'm like, I don't want to pull a hamstring like the first 15 seconds I'm on the pitch. Right?
Anything on the professional level that we should pay attention to?
Well, one of our local teams here in New York is doing really well in Major League Soccer. So New York Red Bulls is doing great. They got a player named Emil Forsberg from RB Leipzig, and he's been tearing things up along with some homegrowns.
And they had a great stadium, the Red Bulls, over there in Jersey. All right, Ira Jersey, thanks so much for joining us. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence, joining us here in our Bloomberg Interactive Brokers studio. We appreciate that. Looking at the markets, S&P, we're now off about 0.4%. The Dow's off 280 points. That's 0.7%. The NASDAQ doing a little bit better, off about 0.2%. Yields do come in a little bit here. The 10-year Treasury off about 2 basis points, 4.44% on your 10-year Treasury. Tom Keene is not here, so I will call out Bitcoin off 3.8%, 66,900 on Bitcoin. Coming up, Robin Erickson, Vice President, Human Capital for the Conference Boards, to discuss the board's new survey on why mandating on-site work makes it much harder to hold on to your workers. I think that is the new normal, folks. You got it. It seems like most companies are being flexible in terms of their in-office work from home type of thing. So we'll get the data there.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Amy Morris. Apple shares extend their gains to 3.5%, reaching a record high. This just one day after Apple's AI unveiling got a lukewarm response. But analysts are now looking at how AI could support an upgrade cycle for the iPhone. General Motors stock touched a two-year intraday high after it authorized a new $6 billion share buyback plan. Its primary business is more profitable, its EV sector is growing, and that's allowing GM to return the cash to the investors. Shares of GM are 1% higher, but we're seeing red on the screen. S&P 500 down 0.4%, NASDAQ down 0.1%, the Dow down 0.7%, the 10-year Treasury yield at 4.44%, and the 2-year yield at 4.85%. And that is your Bloomberg Business Flash. Paul and Jess.
Hey, Amy Morris, thank you so much. We appreciate it. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We are broadcasting live from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Well, despite the U.S. labor market remaining tight, a new survey reveals that the recruitment and retainment challenges facing businesses have eased a little bit. So let's break that down with Robin Erickson, Vice President Human Capital for the Conference Board, joining us via Zoom from Chicago. So Robin, talk to us about the labor market out there from the employer's perspective. How tough is it to attract and retain talent these days?
Thanks so much for having me today. We did find that the challenges of recruiting and retaining employees have eased significantly. As you can imagine, during the Great Resignation of 21 and 2022, it was very difficult to recruit and retain workers. But we did find that while finding talent is a challenge for more than 55% of respondents, this number has decreased from a high of 83% in 2022. And then retaining workers is less challenging because we found that only 41% of human capital leaders reported difficulty retaining workers compared to a high of 66% in 2022. So those are big changes.
Break down what specific industries and job positions are most vulnerable right now when you're trying to find qualified workers, but they're not there to match that up.
Yes, so we did look at the workforce in two categories. We looked at the workforce of mostly professional and office workers. We had about 60% of our respondents from that industry or those industries. And we also then looked at mostly those organizations that had mostly industry and manual service workers. And it's definitely more difficult to recruit and retain talent in those organizations with mostly industry and manual service workers. If you think about the difficulties that the hospitality industry is having, especially with hotels and restaurants, you also have issues trying to find truck drivers remains the most difficult job to recruit for.
So, Robin, I guess one of the big issues that everybody's trying to continue to come to grips with is, where are people working? Is it back in the office 5 days a week? Is it hybrid? Is it work from home? How is this kind of shaking out, several years past the pandemic?
So, obviously, with the spike in remote work, there was a big spike in remote work during the pandemic. And so we actually started with our Reimagined Workplace study, looking at how many employees or workers were remote, how many were hybrid, and how many were fully on-site. Interestingly, the rate of hybrid workers has remained very similar. So what do I mean by that? It's in our survey, we found that 56% of the workers in the organizations that we surveyed are either hybrid and remote. So they're either working part-time in the office and part-time at home, or they're full-time at home. That's 56%. That's down from 61%, which is a difference of only 5%. And the number of workers who are fully on-site has only risen by 5% since 2022, from 39% to 44%. And we've also done some other studies here at the Conference Board and have found that flexibility is the #1 request of employees after a competitive salary.
Do you find that employers are getting more strict to try to get employees back into the office? It was interesting hearing some of the stats you were just mentioning, because some of that seemed to be like potentially, but it still seemed like there still was a good amount of people working from home for various reasons, obviously.
Yes. So the Conference Board has a flagship survey, and in 2024 we found that only about 4% of CEOs were concerned about mandating return to the office. So they were much more concerned about making hybrid work for their organizations. Obviously, there are some well-known organizations that have come out mandating returning to the office. But one of the other interesting things that we found in our study was that those organizations that allowed their employees to choose where they worked had 3 times less difficulty retaining workers. So those organizations that mandated their workers to go into the office, 45% of our respondents said it was difficult to retain workers, while only 15% of those organizations that had employee choice about whether or not they went into the office said it was difficult to retain workers. So clearly there is a business case for hybrid and more flexibility and more employee choice where it's possible.
How about AI? A lot of folks are talking about AI in so many different parts of this economy and what it means for not just the economy, but for society as well. One of the concerns is, what will AI do to kind of the workforce? Will we need fewer workers in different jobs? I know that was a big issue, for example, for the writers' strike in Hollywood. They wanted language in their contracts that protected them from AI, writers and actors. Talk to us about how employers think about AI.
So we know that the majority of organizations are interested in AI in some fashion. They've either adopted it already in their organizations or they're planning to adopt it. AI is here to stay, and organizations can actually be more productive and more efficient with AI. To answer your question, Paul, around whether or not we would need fewer employees, I don't know that we will need fewer employees, but I definitely think that employees will need to have different skills. So one of the things in our survey that we found was that the majority of surveyed human capital leaders said that they were experimenting with AI pilots and not focusing on long-term strategies like the job displacement that might come from AI, but the reskilling for roles that are different.
Very good. Robin, thank you so much. Really appreciate getting your thoughts there. Robin Erickson, she's a vice president for human capital at the Conference Board, joining us from Chicago here. So looking at these markets here, Jess, anything jumping out at you here? Just a little bit of caution,
Apple.
It seems like. Yeah, Apple.
Apple is up more than 3%, trading at all-time highs. So if you look at this stock right now, pulling it up in GP, it's actually trading above $200 now, so 201. Just to put this into perspective, on April 19th, it's hit its low, 165. Was where it actually closed that day. That was around the support levels from its October low, so technicians were watching that earlier this year. And also when it came off of those December highs, it entered a correction in March, so it's been quite a rebound since April 19th, so up about 21% since that low. That was also a low that the NASDAQ made recently too in the last just under 2 months here. So even though we are seeing the broader market lower, Apple here bouncing back, and a lot of people, especially because that stock relative to the S&P 500, it was its worst quarterly performance in the first quarter. It was like its 4th worst since the dot-com bubble bust relative to the S&P 500. So coming into the second quarter, because it had underperformed so much against, say, stocks like NVIDIA, because that stock was up over 80% in the first quarter. You've seen Apple, though, rebound pretty sharply here since those lows in April. So something to keep a close eye on today in the midst of the broader market being lower, Paul.
We heard from on Bloomberg Surveillance earlier today. We heard from Dan Ives, mega bull on Apple, and of course he took yesterday as a definitely glass half full kind of day for Apple. And Gene Munster, also I would say a generally bullish analyst, and has been, I would argue, one of the top voices on Apple for decades here. He really saw it as maybe one of the most important days for Apple in terms of product launches, just simply getting into the game and kind of putting the Apple stamp on this part of the tech space, really focusing on what Apple does well, which is convenience, ease of use, and security.
That's right. And this is a company, of course, that typically has massive buyback programs. And just about a month ago, whenever we did see its earnings report, it did announce that it would have this massive historic buyback program as well. Obviously, that still would need to be executed. But typically, when you think on the fundamental sides of a stock like that, traders keep a close eye on that. So not surprising, a month later, after rolling that out, you'd see that stock back at record highs.
Yeah, so strong day for Apple. Again, up about 4.3% today, all-time high intraday. That's helping NASDAQ. NASDAQ's basically unchanged on the day versus a 7% decline for the Dow. So we're seeing some of the Apple and some of the other tech stocks lifting the NASDAQ here. And Apple, just for the kids at home keeping score, it's got a market cap today of $3.08 trillion. It's up about 4.5% year to date, pretty much all of that coming today. Over the past 12 months, up about 12%. And you look at the valuation, I don't know, on the September 24 earnings, about 30 times earnings. So it's, it's not cheap, but interesting to see a good day today. With our news in New York City, Michael Barr.
Thank you very much, Paul. Jess, Amy, the jury in Hunter Biden's criminal trial began a second day of deliberations this morning. The president's son is charged with 3 felony counts of illegally possessing a gun while being a drug user and making false statements about his drug use when buying the gun in October of 2018. During the trial, prosecutors used Biden's own words against him, including audio excerpts from his memoir.
I used my superpower, finding crack anytime, anywhere.
The prosecution also used text messages sent by Hunter to Hallie Biden, widow of his brother Beau, and a woman with whom he later had a romantic relationship. Former President Donald Trump meets Thursday with Senate Republicans on Capitol Hill ahead of an event with corporate CEOs hosted by the Business Roundtable. This comes after Trump sat for an interview Monday with New York City probation officers in his hush money conviction. Bloomberg Washington bureau chief Peggy Collins says the campaign is in a new phase now that the trial is over.
While Trump was going through the trial for weeks in New York, he had to actually be in the courtroom at least 3 days a week. So he was constricted in terms of how much he could campaign around the country. And we saw this weekend that as soon as the trial wrapped and he was convicted, he was out on the campaign trail again to Las Vegas, Nevada, one of the most competitive states that we have in this election.
Bloomberg's Peggy Collins reports Trump raised $50 million in the days after his felony convictions. Emmanuel Macron said his position as French president won't be affected by the result of legislative elections after a report he considered quitting. Macron was asked in an interview with Figaro magazine what he will do if Marine Le Pen's national rally wins the vote, due over 2 rounds, concluding July 7th, and calls for his resignation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Amy Morris, and Apple continues its rebound, hitting an intraday record high. Shares now more than 4% higher. Analyst Keith Gill, known online as Roaring Kitty, says he is holding his position in GameStop, even as shares of the video game retailer continue to slide. GameStop shares are now down more than 3.5%, extending its losses after a share sale plan sparked a sell-off. And stocks are falling from record highs ahead of tomorrow's Fed decision as investors brace for volatility. The S&P 500 down 0.3%, NASDAQ is flat, and Dow is down 0.6%. The 10-year Treasury yield at 4.45%, the 2-year yield at 4.86%. And that is your Bloomberg Business Flash. Paul and Jess.
All right, Amy Morris, thank you so much. We appreciate that. Jess Metton sitting in for Alex Steele, and I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Podcast. As Amy was just reporting, Apple moving higher. It's now an intraday all-time record. Good for them. It's taken the lead over NVIDIA as the second most valuable company in the world, while also reclaiming the $3 trillion market cap valuation. So big day for Apple's stock shareholders. Good news for them. Let's break it down a little bit here. Angelo Zeno joins us, Vice President and Senior Equity Analyst at CFRA Research, joining us from Nueva York via Zoom. Angelo, thanks so much for joining us here. How did you interpret yesterday's news from Apple? How big of a deal or not was their announcements?
Yeah, I mean, thanks for having me, guys. So, as far as, how big of a deal it is, we think it's a big deal. To us, the Siri probably just got its biggest upgrade ever since its, original kind of appearance back in 2011. And you kind of look at what they've done across the ecosystem, the new AI capabilities and tools that they're going to push out to developers now. There's going to be a lot that they can do with these tools, and in terms of upgrading their apps and providing new capabilities out there to the consumer. May not necessarily be something you see over the next kind of 3 to 6 months. May take some time here. That's why we've told investors out there this is going to be more evolutionary than it is some sort of super cycle that you're going to see later this year. But that said, I mean, I think what's really important here is you kind of look at most consumers out there today. Most consumers aren't using kind of AI in the sense of ChatGPT, among other type of large language models out there. To the extent that they possibly can. And when you kind of think about what Apple is doing, is they're throwing that kind of ability out there for consumers to have it directly in their hands. And we think that's a big deal, and we think that's going to cause consumers out there to ultimately upgrade. It may not be the 16, it might be the 17, but ultimately it's a very positive thing for the evolution of Apple.
You maintained a buy rating on the stock after yesterday's news following the conference, but then also if you look at the A&R function, I know Paul likes to look at this in the terminal, there's 40 buys, 15 holds, 5 sells, and Paul and I were just chatting about how this stock, when you're looking at Apple, up more than 20% since that April 19th low. How much more room do you think the shares have to run now?
Yeah, so Jess, I think that's a great point. So you kind of look at the move that they had going into the announcement here, right? I mean, it is a fantastic move. The stock was actually down, I think, about 14% on a year-to-date basis into late April, right? And I think that kind of the story from January to April was, hey, listen, we've got some China issues, expectations in the second half of this year may not be able to be met. Now you kind of change the narrative around since kind of their earnings release in early May, as well as kind of the developers conference here, to one whereas, hey, those numbers may not be attainable, to, we've got now 6% expected growth for the iPhone 16 cycle. There's probably upside to that number instead of downside. So in our view, narrative has changed. It's all about whether or not, or how much upside can we see from that iPhone 16 cycle at this point in time. We think there's upside to the 6% number, probably at least 8 to 10%. It'll all be dependent also on whether or not Apple can Apple looks to increase prices in the next cycle. That remains to be seen. But in our view, there's upside potential that still remains despite the move that we've seen here over the last 5 to 6 weeks.
So, Angelo, I'm out there in the marketplace sporting an Apple iPhone 11. So I'm guessing I'm right for an upgrade.
Oh, an 11.
Yeah, I
I
guess
think I have a 14.
I guess I'm ready
and
for
mine's,
the upgrade.
mine's a few years old,
I
so
know,
yours
I
is
know.
extra.
It's ridiculous. So, Angelo, do you think there could be people like me that are going to take this AI features that'll be coming out in the iPhone 16, I guess, in mid-September? Are there going to be people like me that are going to go out and upgrade? Is this going to be a real driver of unit sales, do you think?
Yeah, I mean, listen, I think, well, first off, there's not much of a bar to beat here because the iPhone 15 cycle is a down cycle. If you actually look at the 14 cycle, it was a relatively flat cycle as well. So we've kind of had this kind of pause here over the last kind of 2 cycles in terms of on a unit basis, right? Whereas the 12 and 13 really took a lot of kind of upside there because of some of the China market share gains because of the 5G cycle, upgrade cycle, and what have you. So as we kind of now look here into the 16 cycle, I think a number of things here. As far as kind of the fact that the iPhone 12 was that last big upcycle, you're now looking at 4 years past that. So a lot of the 12 consumers out there are going to potentially look to upgrade. But for someone like you or even someone like myself that haven't upgraded in years, this is, I mean, forget about the AI capabilities, just the camera capabilities that we've seen since the iPhone 11, it should, you're going to see some notable enhancements. But I do think kind of the new AI capabilities out there will drive some of those older consumers to upgrade. I think also, listen, these AI capabilities don't work on anything kind of outside of the 15 Pro devices kind of. So you can even potentially see some, iPhone 13 users or 14 users out there look to upgrade as well.
Talk to us more about when we're saying AI capabilities, what exactly are we going to be able to use on those devices that's going to be different from before?
Yeah, I mean, listen, I think most of it is pretty basic in nature versus kind of what we've seen thus far in some of the announcements we've seen, right, in terms of what Samsung has announced at the S24, what we've seen Alphabet with the Google Pixel and what have you. But, clearly Siri getting its upgrade is the big thing out there. Embedding ChatGPT functionality in there as well is a big deal. But, they showcase capabilities like rewrite, summarization. Genmoji might be a cool thing with, some of the younger users out there. They showed some, cool stuff on the photo side of things. So there are going to be incremental additions in terms of AI across their ecosystem that you're going to be able to kind of use and just ultimately kind of make yourself just more efficient in nature. I mean, if there was something in an email that you had forgotten to put in your calendar, that's something that kind of Siri is going to be able to help you with, whereas you no longer have to kind of go back and search that in your email box. So a lot of kind of small useful information. We'll see how well this works once it actually comes out and it's actually in the hands of consumers out there. But that said, I think a lot of it is incremental, but I think the way Apple kind of markets their iPhone devices and all their devices in general, when you kind of throw the AI storyline on top of that, I think that's really what kind of is going to capture the appeal of a lot of those consumers out there.
All right, Angelo, thank you so much for joining us. Angelo Zeno, he's a vice president and senior equity analyst at CFRA Research. I actually think I will go and get a new iPhone with the new one in September.
Look at you.
Mm-hmm. And I'm not for AI, not for the camera. I don't know.
I kind of need a new camera.
I don't know if
mine's a little too fuzzy and grainy. However, I have dropped my phone many times, so that's not Apple's fault. It's actually my own fault.
Well, my thing is it's all about the battery. When the battery starts dying,
that's
my clue to upgrade. And it has been kind of losing its...
Right. I keep having to charge mine multiple times, too.
Right. So I think that's kind of the way. That's historically been my...
So you know what? Maybe you and I both will have new phones later.
Yeah, we'll walk over. I mean, the good news is we have a huge Apple store just, right down the block here.
That's right.
On Fifth Avenue.
It's across from the plaza.
Across from the plaza. I walk past it, the Penn Station every day. Sometimes I'll just go in there with the other throngs of billions.
Yes.
And tourists go to that store.
Oh, it's always packed. It's
always
wild.
packed. Crazy. So maybe I'll go there. And that's where Tim Cook comes when he comes into the city. He does some of his product launches there
That's
at that
right.
big Apple store.
That stock trading above $202 right now, still trading at an intraday record. So eclipsing those December all-time highs, Paul.
Good news for our friends in Cupertino. S&P 500 off 0.2%. NASDAQ actually trading higher here, up about 0.1% on the backs in part of that Apple news. We'll have more coming up. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Apple shares hit their first intraday record since December. Investor sentiment around the iPhone maker continues to improve. This just a day after Apple announced a partnership with ChatGPT maker OpenAI. Bloomberg Intelligence senior tech analyst Matthew Bloxham says Apple may be hoping the new AI features lead customers to upgrade their smartphones.
This is a kind of very broad range of updates to the full suite of their apps in the ecosystem, and it links very specifically to their hardware lineup because unless you've got an iPhone 15 Pro or Pro Max, you're going to have to get an iPhone 16 when they come out.
And shares of Apple are now more than 5% higher. Spotify is set to introduce a new higher-priced premium plan for its most ardent users later this year. Sources tell Bloomberg users will be charged at least another $5 per month for access to better audio and new tools for creating playlists and managing their song libraries. Spotify will position this new option as an add-on for existing customers. Spotify shares now more than 1% higher. Eli Lilly shares advanced as much as 3.5% in the pre-market after an FDA advisory panel decided the firm's Alzheimer's drug was effective and recommends U.S. regulatory approval. Lilly shares are now 0.2% higher. And less than 2 years after its U.S. debut, Chinese e-commerce upstart Temu is attracting more repeat shoppers than eBay. A survey in April by online marketing firm Omnisend finds 34% of respondents buy something from Temu at least once a month. 29% buy from eBay that often. Amazon remains the standout leader, with more than 3 out of 4 respondents buying at least once a month. And that's your company news at this hour. I'm Amy Morris.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, the tape is turned a little bit mixed here. We have the S&P off about 1/10 but the NASDAQ up about 0.2%. Keep an eye on that. Yields come in about 2 basis points on your 10-year Treasury, now trading at 4.44%. Commodities, WTI crude oil off slightly, now $77.40 a barrel. And Bitcoin, that's off 3.9%. We're calling just below $67,000 per token. Let's get some world and national news right now with Mr. Michael Barr.
Thank you very much, Paul. Jess, Amy, Hunter Biden's fate is now in the hands of a Delaware jury. This morning, the panel began deliberations for a second day. The president's son is accused of lying about his drug use when he bought a gun in 2018. If convicted, the president's son could face up to 25 years in prison. Secretary of State Antony Blinken is again in the Middle East, pressing the case for the Gaza ceasefire backed by the United Nations and the Biden administration. Bloomberg's Irv Chapman reports from Washington.
Blinken summed up the state of play.
I met with Prime Minister Netanyahu last night, and he reaffirmed his commitment to the proposal. Everyone's vote is in, except for one vote, and that's Hamas. And that's what we wait for.
The itinerary for Blinken's continued shuttle diplomacy also includes Egypt, Qatar, and Jordan. The hope is for a ceasefire that would free hostages and prisoners and then keep being extended. In Washington, Irv Chapman, Bloomberg Radio.
The main shipping channel into Baltimore's port has fully reopened to its original depth and width following the March 26 collapse of the Francis Scott Key Bridge when a cargo ship crashed into it. It comes after a massive cleanup effort as crews removed an estimated 50,000 tons of steel and concrete. 6 members of a road crew were killed when they plunged to their deaths during the collapse. North Dakota voters today will decide a ballot initiative imposing an age limit on the state's congressional delegation. A person would be barred from running for Congress in the state if they are 80 or older. Jared Hendricks is with the group Retire Congress North Dakota, which is behind the measure.
There's a lot of discontent with Congress right now, and particularly there's a lot of support both for term limits and for age limits.
Jared Hendricks with the Retired Congress says in several states there are already age limits on state judges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Jess, and now Charlie.
All right, very good. Michael Barr, thank you so much. We appreciate that. Jess Menton, you do a lot of reporting. You write a lot of stuff for Bloomberg News. What's your latest and greatest?
So I've been covering the options market as far as what the pricing and implied moves look like for Wednesday specifically because, as you know, Paul, so it's kind of a double header here because you have CPI as well as the Fed decision. So I was speaking with Stuart Kaiser over at Citigroup. He's the head of U.S. equity trading, who's obviously on Bloomberg many times on Bloomberg Radio and TV. So when he was crunching the numbers, they looked so far, the move is potentially about 1.3% in either direction for Wednesday, as long as those cost of at-the-money straddles still hold through today's close. So if that does, pricing remains the same place, that would be the largest implied move for a Fed decision day since March of 2023. And not surprisingly, it's higher because you have both of those events. And I wanted to point out, too, because Andrew Tyler, he's the head of U.S. Market Intelligence at J.P. Morgan's trading desk. He was talking about, in a note to clients, how with CPI and the Fed decision on the same day, there could be a possibility that if CPI, whatever is the outcome, it could be reversed depending on, obviously, what Fed Chair Jerome Powell says during his press conference. So the options data he was looking at, if you're looking at the straddles, when it comes to by Friday, kind of a similar move there, around a 1.3% to 1.4% move there. But it was interesting because in one of my stories, people can take a look at the chart, but the JP Morgan trading desk, they have kind of a scenario analysis where you can go through and you can see what they're expecting for the May CPI month-over-month reading, the probability there, and the potential for what they see the S&P 500 reaction to be.
All right, busy day tomorrow.
That's
Again,
right.
CPI at 8:30 in the morning Wall Street time, and then 2 p.m. Wall Street time, the Fed statement, and 2:30 the conference with or the press conference. Michael McKee will be there with Fed Chairman Jay Powell. So a lot going on tomorrow. We'll have it all for you. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Marcus Ashworth, Bloomberg opinion columnist covering European markets. He's got a column out. Macron plays fast and loose with investor faith. I can't wait to get into that because, like Barry Ritholtz, Marcus Ashworth is one of those guys who he flipped the switch and you just let him go. And great stuff.
He'll just take the reins
every time. So that'll be great. We're also going to speak with Christina Hooper. She is the chief global market strategist at Invesco. We'll get her outlook for these markets and this Federal Reserve. So we got a busy hour coming up on Bloomberg Intelligence. Right now, let's kick it all off with Amy Morris and the Bloomberg Business Flash. Amy.
Hi, thank you very much. You got Charlie Pellet on the flash. Switch the switch, and let me go, because here's what's going on. Stocks lower right now with the Dow, the S&P, NASDAQ right now trading mixed. We got the S&P down 753.53. Drop right now 0.1%. We've got the Dow down 185, lower now by 0.5%. NASDAQ right now up 35, higher by 0.2%. Your 10-year 4.44% for the 2-year, 4.85%. Gold up 0.2%, 23.14 the ounce, and West Texas Intermediate crude down 0.3%, 77.52 right now on WTI. We are brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Wall Street, meanwhile, looking ahead to tomorrow afternoon's Fed decision and news conference from Fed Chair Jay Powell. You can catch it all here on Bloomberg Radio. Lauren Goodwin is Chief Market Strategist at New York Life Investment.
I think that they're trying really hard to walk this tightrope between really where they sit right now, which is that the data are slowing. They believe they're restrictive, but they want to make sure that that doesn't turn into a policy mistake of being restrictive for too long.
Lauren Goodwin of New York Life Investments, one of the world's biggest tech ETFs, looks poised for a shakeup after NVIDIA catapulted past Apple in size. Thanks to diversification rules, the $67 billion Technology Select Spider Fund, ticker XLK, has held way fewer NVIDIA shares for months now, while the AI giant continues to soar. Today, NVIDIA, little changed, down 1%. We've got shares of the Technology Select Sector Spider ETF XLK. It is up by 1%. So again, recapping, stocks lower, the Dow, the S&P in the red. We've got NASDAQ higher, NASDAQ up now by 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
That certainly was Charlie Pellet. Thank you so much, Charlie. We
little switcheroo there.
Exactly, Charlie Pellet bringing us home here in this 11 o'clock hour. Looking at the markets, Charlie was just reporting, it kind of got a mixed tape out there, but there's definitely some movement underneath the hood, including Apple. We've been talking about that all morning.
That's right.
Higher yet again, but there's a lot more stocks happening out there. So let's go to Norma Linda. She covers the equity markets for Bloomberg News, and she joins us here in our Bloomberg Interactive Broker Studio. Nora, what are you looking at?
Well, my team is keeping an eye on the financial sector. That is the worst performing sector right now in the S&P 500. Of course, we know just a day ahead of that Federal Reserve decision that we're going to get tomorrow afternoon. It's really dragging the S&P 500 down from its recent all-time high. I'm looking at the KBW Bank Index. It's down more than 2%. Of course, we've got investors really positioning themselves ahead of tomorrow's highly anticipated decision. And we're seeing a lot of the market flocking to safe haven sectors. We are looking at some investors flocking to real estate. And then I'm looking at utilities a bit lower here, right behind financials. But looking at some names, really JP Morgan and Citigroup among those names being hit this morning.
That's right. So if you look at the BKX index and you do MEMB, you can then go and see all of the different.
Hold on. What am I doing now?
So MEMB, so you can see the which banks are included. So members is MEMB for that. So obviously what Nora was talking about, JP Morgan in there. You have PNC, which obviously, sometimes people might refer to as a regional bank, but that's still a very big bank. That's very close. It's just outside the big six. Right. super, and then obviously Zion's U.S. Bank Corp there. And so if you look at its drawdown from its latest highs, it's down about 7% from that, but it is up about 40% since its October lows. So you still have kind of a number of stocks there that have been on the up and up, but obviously under pressure today, heading ahead into that Fed decision.
And what I've heard a little bit more, I guess, in the last few weeks is talking about commercial real estate, where you will see it and where there will be problems. Now we're getting more and more mark-to-markets on some of these buildings around the country at serious discounts, and interest rates are still high. It will be the regional banks.
Yes, and I actually just came back from a real estate conference at REIT Week by NAREIT, and the talk was all about commercial real estate. And it seems to be a bit more of a positive outlook. I heard a lot of companies saying that they think that we have seen the bottom and there should be an uptick moving forward.
Really? Okay. Where was NAREIT conference?
It was actually here in New York City, in Midtown.
Nice.
Yes,
All right. And
that's
that's kind of your beat.
It
REITs.
is, yes, 100%.
Okay, very good. What else we got here?
Well, I'm keeping an eye also on Spotify here. Now, this company is rolling out a new higher price premium plan for its most passionate customers. I myself am a customer, don't think I'll be opting into this, but it is an add-on, and essentially it'll be at least $5 more per month for access to better audio, new tools, and some different things that you can use to create playlists and managing song libraries. We're seeing the stock pairing a bit of its gains, but up as much as 3.4%. But the stock as a whole, it's really been up more than 60% year to date, so some strong gains here.
You know, just a quick flash here. Hunter Biden jury tells court it reached a verdict in the gun case. So I do hear that June Grasso will be coming pretty soon to chat with us, depending on once we get the
I will
verdict.
continue to follow up on that story as well. Are you a Spotifyer? Is there a term? Are you a Spotifyer?
I don't know. Is there some sort of...
I use it as well.
You do?
So
Okay.
you guys are Spotify.
Okay.
I'm going to speak for Charlie Pellet and say he's not a Spotify
We need to find out.
What is he, Pandora?
I know that he's a big fan of Madonna because he talked to. He's going to talk about it later. He went to her concert a couple months ago, and it was pretty epic hearing him talk about it.
I got a lot of thoughts on this, but you know what? I spend a lot of time getting my music right off of YouTube. That's the place that I go to.
That's
certainly
a great.
not
Wait,
Spotify.
what's your favorite song, Charlie?
Well, I tell you, it's a hit record that I had with a group called AJR, and the name of the song is called Bang, and I was privileged to do the voice on that, where it goes,
now I gotta
bang,
Google
bang,
that.
bang, here
There we go.
and I get to do the here we go part. But that's another conversation for another time entirely.
All right, very good. All right. Nora, thanks so much for joining us. Nora Melinda there. We appreciate that, getting the latest as well as from our good friend Charlie Pellet. All right, here's the thing. So when you had the French president, Emmanuel Macron, call a snap election, obviously big news, surprising news in the political circles.
That's right.
But also surprising news in the financial markets. And I learned something. You need to look at the gap between the 10-year French yields and their German counterparts to see kind of where the relative risk is in the marketplace. And the gap between the 10-year French yields and their German counterparts climbed to the highest this year in the wake of Macron's snap election. I'm not really sure why, but we have somebody who does
Who
know
can
why.
talk to us about this
Marcus
and walk us
Ashworth,
through.
he covers all that European stuff with an acerbic wit, and that, I mean that in the nicest way. But we love talking to Marcus because he spares no bones here. Marcus, what was your reaction to what we saw out of the European Union and then the subsequent decision by Mr. Macron?
Hi guys. I was thinking that this was a long time coming, but it was worse than perhaps everyone, including Macron, had expected, and therefore it put him in a very difficult situation with, I guess, his main opposition polling more than twice which his party got. They only got like 15% or something. So though he has another 3 years as president if he wants to, I don't think he'll resign, but there was some question about that today. It means he won't have the ability to equivalent of Congress to be able to do very much. He can still do a lot of presidential decrees, but nonetheless, it's boxed him in. And more importantly, he can't run again. By then, by 2027, his 10-year legacy would be pretty poor. So I think what he's deciding to do now is gamble on a political swing, which has gone to the right wing, that perhaps the French people, if they're challenged again, may push back against that. But the consequence of this is that the bond market in particular, and the stock market, and to some degree the economy, is going to have to take a little bit of a, how can we say this, a bit of a shake-up, because politically, this is a very aggressive move, and it also puts into very much sharp contrast the financial fiscal situation of France, which is rising ever inexorably higher in debt, and particularly its budget deficits. Annual spend is much more than it takes in. It's 5.5% last year, which is pretty shocking, and not likely to drop much by next year. And I think the European Union could put it into double secret probation. They call it an emergency deficit procedure. But really what it means is that in the sin bin, and that's hugely embarrassing for Macron or any government. But the point is the rating agency, the credit rating agencies, we saw S&P at the end of May knock France down to AA-. Fitch are already there. And Moody's today came out and basically said they're one notch up at AA2, but they may be having a look at it. So it's all about a worsening credit of France, a worsening political regime, which makes the European Union very nervous. Because, we've seen with the previous situations with Greece and with Italy, they'll turn a blind eye to most things, but they want everyone to be very much pro-Euro. And Marine Le Pen's right-wing party, which is the National Rally, though they no longer argue for Frexit or France exit, they once did. And memories are pretty long in Brussels. So the last thing they want is a non-fully backing Euro-style prime minister, even under Macron as president. That'll be very unsettling for Brussels. That means it's very unsettling for credit rating agencies. Panic, panic, panic. It means that French debt is perhaps a little bit more risky, still pretty safe, but a little bit more risky than it was before the weekend.
You were talking about how France has seen a sustained deterioration in its fiscal position, particularly when you're looking at its debt load. How did France get into this position?
They spend more than they earn, or more than they tax. The reason is, Macron was elected on reforming the fiscal situation, and principally one of his key things was raising the retirement age, which he raised from sort of really 60, 62, up to about 64. He wanted to get it up to about 67, which, for instance, is where the UK is, but massive pushback. And the fact he very basically couldn't get it through unless he pushed it through by this, as I mentioned before, presidential decree, worried some of the rating agencies then. Now the fact that he has gotten really no way of getting stuff through the National Assembly, their Parliament or Congress, is a really scary situation. So, that means there's even less chance of any form of fiscal improvement, of getting that budget deficit down and reducing, because if the National Rally were to become the party to have the prime minister and try and form some form of cohabitation, I think it's in English, is that they won't get any, they won't allow any form of spending cuts or anything to reduce the benefits that a lot of French people. 58% of the French economy is state spending. It's a very socialist driven state, and they don't like their benefits getting touched, which means nothing will happen at least 2027. No improvement on the fiscal outlook. That's very bad news for bondholders, for credit rating agencies, and indeed probably for European Union cohesion.
So I note in your column, Marcus, perhaps one of the rationales for Macron's boldness here is that it will actually force Marine Le Pen to maybe reveal what her plans for the economy are. What do we know, or what don't we know?
Well, they deliberately, a bit like the Labour Party is about to take power in the UK, they've been very, should we say, recherché in telling us what they are actually planning to do. And Marine Le Pen has basically said no to many things, but hasn't told anyone really what they're planning to do, how she would sort the pension situation out. But the one thing we know for sure, they are pretty anti-immigration, and they are pretty anti the pension changes and any other form of benefit changes. So it's going to be almost impossible for the government to stop its welfare spending bill, and that can only mean essentially this would be a deficit and debt to GDP ratio negative scenario. I would think it'd be very hard for her. But Macron's gamble is precisely as you laid out, is that if they put them in power, at least nominally, the prime minister doesn't have anything like as much control as you would think, but they have ability to try and put some things through. If they turn out to be incompetent, and they turn out not to do what they said they were going to do, or anything like this, it would make the presidential elections in 2027 a little bit more anti the National Rally and pro, should we say, Macron's or more centrist. The huge gambles, it could go the other way. These guys could turn out to be very good in power. In fact, the centre-right are already talking about maybe teaming up with the National Rally, the far right, and creating an anti-Macron coalition. That could become very popular, and we could see it would be a very stupid gamble that Macron's taken. We just don't know. The point is that if you're a bondholder, and indeed, as you've seen with the French banks like SocGen got hit really hard yesterday, why would you want to take the risk and perhaps go to somewhere a little bit more safe like Germany or, I don't know, somewhere else in Europe?
So, Marcus, you were just bringing up SocGen. What other parts, when you're looking at French equities, have been hit hardest? Which other ones have been maybe more shielded right now?
Well, yeah, the banks got hit hardest. They always tend to. Partly that's because, a lot of international investors, particularly American investors, they're invested in Europe. They tend to like the banking sector more. There's more bang for the buck. They understand and can play that game much more cleanly. So, you should be really worrying if you start seeing things like insurance companies going, because that's a credit issue. But banks are an easy sell, highly liquid. I would expect if things do calm down and by July 7th, we know the election results, and they aren't perhaps as bad as people expected, I would think the banks would probably therefore do the best. But, industrial sector in all of Europe is in a pretty tough time at the moment. France is, world leader in luxury goods, so LVMH, things like that. These are companies to keep a close eye on, but they are perhaps less suspect to these politics, but still not great for anyone.
All right, very good. Marcus Ashworth, thank you so much. We appreciate it. Folks, Marcus is a columnist covering European markets for Bloomberg Opinion. Check out his column today. Macron plays fast and loose with investor faith. So very interesting there. Again, we're waiting. Hunter Biden has been convicted of gun charges by a jury in the Delaware trial. We'll have more news on that coming up in just a moment, more reporting there. Jury took 3 hours to reach the verdict against the president's son here. So we'll get some more reporting on that, but that was certainly a big piece of news coming out there, and we will have that in the break. So we're going to have June Grasso. She's going to join us, our Bloomberg
legal expert,
yep,
to come in and break this down.
So there we go. So we're going to get the follow-up reporting on this story, but this is certainly a big news for Mr. Biden, for his father as well.
That's right.
And so we'll see how this plays out in terms of the sentencing. That'll be obviously very key when we get that news coming up later.
It will, and especially because obviously the Biden administration has remained tight-lipped for obvious reasons about this. So we're going to see what June can break down for this. But again, jury they did resume those deliberations earlier this morning in that criminal case against Hunter Biden. So that did come over a gun President Joe Biden's son bought in 2018 when prosecutors did say he was in the throes of a crack cocaine addiction. So that's some context here about what was happening amidst this trial when those deliberations began once again this morning.
Right, he was facing 3 felony charges over the gun he had for 11 days before his brother's widow found it in his truck and threw it in the trash here. So the federal gun trial in Delaware, they have reached a verdict. They have took 3 hours to reach this verdict where they convict Mr. Biden of gun charges by jury in Delaware.
And basically, when you're thinking about, because you had just mentioned the 3 felonies that they were deliberating on, this was pitting, when you're talking about this case, him against obviously his father's Justice Department in the middle of the Democratic president's re-election campaign. So a very tricky dynamic here.
Yep, absolutely. So again, the news just coming across the Bloomberg terminal. Hunter Biden, a jury tells court that it reached a verdict. Hunter Biden has been convicted on gun charges by a jury in Delaware. The jury took 3 hours to reach the verdict against the president's son. Joining us now is June Grasso, Bloomberg's legal analyst. June, what do you make of this ruling today?
Well, I'm surprised it came in so fast, but there was a lot of evidence that the prosecution presented that Hunter Biden was addicted to drugs around the time, at least, that he filled out that form. The only hope, I think, that the defense had was jury nullification. The jury saying that, there are a lot of jurors about 4, I think it is, who have family members who are addicted, and they heard for a week about Hunter Biden's, descent into addiction and how it took him and some of the members of his family down. So if those jurors had felt some sympathy for Hunter Biden and decided that they didn't want to follow the strict instructions, the defense had given them some outs to say that he didn't knowingly check the box that said, I'm not a drug addict, I'm not addicted to drugs, I'm not using drugs. And there were some technical arguments they could have, clung to, but the prosecution just presented a mountain of evidence, including Hunter Biden's own words in his memoir, including testimony from his ex-wife and ex-lovers. And it turned out that the daughter's testimony, which the defense presented, sort of backfired on them, because on cross-examination they presented her with some text messages that showed that around the time that the gun was purchased, Hunter Biden was not available. He wanted to get his car at 2 a.m. It was very suspicious sounding, sort of sounding like what a drug addict would do. So I think, the prosecution had a mountain of evidence.
What are next steps here? I guess sentencing?
Sentencing, there'll be a probation report. Sentencing, I mean, it's anyone's guess with the sentencing, because I don't think, he could get, I believe it's 25 years, but I don't, think the judge would give him that. I mean, this is a crime where no one was injured at all. There's no victim in this crime. He's the only victim, really, of his drug addiction. And then there'll be appellate issues. And there are some very strong appellate issues, because the Fifth Circuit, which is a conservative circuit, since the Supreme Court's landmark decision in the New York gun case, has said that this law is unconstitutional. The law that makes it, that doesn't allow someone who is a felon or, addicted to drugs to have a weapon. So there's that.
Do we know what the timetable is for sentencing?
No, the judge will announce the sentencing timetable. It depends. I don't know about Delaware. I mean, New York, it's usually within a month or so, but I don't know about Delaware.
Would we know when the judge would announce that, or is that to be determined at this point?
The judge usually, when he takes or she, this case, takes the jury verdict, will announce the sentencing date. But again, I'm not sure what's going to happen in this case.
Why was this case brought? Who brought this case?
Well, that is a big question.
It was
you have
Delaware.
An hour or two?
Okay.
I mean, this is a special counsel, and what happened was he was investigating this for quite some time. They had reached a deal, Hunter Biden and the special counsel's office, Weiss. They'd reached a deal in which he wouldn't serve any jail time, and he would also settle the California tax case. When it came to this judge, they went to court. They expected the deal to, be announced and formalized, and the judge found some problems with the way the deal was structured, and it just blew up there in the courtroom. The judge said that, there's something wrong, and then the defense said, well, we're not going to plead guilty if this, that, and the other. It just blew up, and so at that point, they decided to go to trial. But it's all about a special counsel who has been appointed to oversee the Hunter Biden cases, and I think we've seen that special counsel often feel that if they don't bring cases, if they don't win cases, then what are they there for?
Do you expect that the Biden administration would make any sort of comment on this?
The president has already said that he will not, he could pardon his son, but he has said that he will not pardon his son and that he'll accept the jury's verdict. So I don't know if you're going to hear anything more than that. The First Lady has been at the trial almost every day. She flew to France to be with her husband, and then she came back. And so they've had an incredibly large family gatherings there, and apparently, crowding the courtroom to the point where the Secret Service didn't know where to sit. So, and they've had prayers, sort of prayer gatherings in the mornings.
All right, June, stay right there. For political reaction, we can bring in Jeannie Shane Zaino, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Jeannie, thanks so much for joining us here. What's the political repercussions here for President Biden?
Well, the easy answer is we really don't know, because this is the first time we have had a president's child who, while they are sitting as president, has faced criminal charges and, of course, now been found guilty. So that is one thing. But we have seen some polling on this For instance, Emerson did a poll, and they found, similar to the reaction to Trump's conviction, that about 6 or 7 out of 10 American voters said it wouldn't impact their vote whatsoever. But that left about a quarter of Americans saying it might impact them. And in this case, about 11% of those were Democrats. And in an election this tight, if you see drop off of 11% potentially, that can have an impact. So there is an electoral impact that we're going to see how that sort of comes out in the wash by the time we get to November. The other part of this, though, is, as June knows, Hunter Biden is facing other charges this fall, potentially before the election in California. That could have an impact. And of course, there's the very personal impact on the president and the first lady. I think we undercount how much of a toll this takes on a father or a mother, a parent in this case, and how that can impact a candidate running for office on top of trying to serve as president of the United States. So all of those are real repercussions here.
All right. Also, right now, I want to bring in Joe Matthew, co-host of Balance of Power from Washington, D.C. Joe, what's the feeling within D.C. about this the legal issues facing the president's son here and how they're being pursued? What's the feeling in Washington?
Well, it depends who you ask, just like anything else. If you talk to the chairman of the Judiciary Committee, Jim Jordan, the chair of the Oversight Committee, James Comer, they will tell you this is part of the narrative that brings you to understand what they like to refer to as the Biden crime family. But every hearing that's been held and every attempt to get the president involved here has so far fallen flat by this Republican conference. And so, you know, people are kind of watching this from the sidelines. If you ask Democrats, they're outraged, and they'll say Donald Trump complains about the weaponization of government and the judicial system, and this is it on full display. How many people have been tried and convicted on these crimes before? But look, you know, it's just another brick in the wall, to be honest with you here. It kind of depends on what you are looking at, who you support, and what the Rorschach test is here. If you were already upset with Joe Biden, then this helps your argument. If you see a double standard with Donald Trump, that's another question here. We have to remind ourselves that Hunter Biden is not running for president.
I want to bring June Grasso back into this conversation. What other potential legal issues might Hunter be facing, if at all?
Well, he's facing a trial in California over his taxes and what he filed on his taxes. That's considered a much more substantial case than this one was, because that's a case that has been brought before. This case over the gun charges, it's very rare. No one I've talked to knows anyone who's been tried or has, you know, represented anyone who's been tried on charges like this, where you were a drug addict. I would say allegedly, but now I guess the jury confirmed that. You were a drug addict. You lied on the form and bought a gun, but there was no crime associated with that gun. The gun stayed locked away. So it's unusual to bring a federal case over something like that. Normally that would be something that would be pleaded out, and which, as I explained before, what they tried to plead it out here. So, and he's facing, you know, it's 3 felonies here. So, and they're all related to this one transaction, checking this box. It's very unusual to have even some Republicans have come out and said that this is a really unusual case.
Jeannie, how do you think the Biden administration and the Biden campaign will, in fact, address this issue going forward during the campaign?
I think they will continue to say that this is a very personal and tough issue for the president. He loves his son, but he has let the Justice Department do its work, obviously unimpeded by the president. And this is further proof of the fact that when Donald Trump says there is a political persecution of him, that is not the case, because here you have the president's own DOJ prosecuting his son, and now the jury finding him guilty, facing potentially 25 years in jail. All of that's unlikely, obviously. So I think they're going to just make that case, and the president has promised not to do what he could do, which is pardon his son, although I believe that that will be increasingly tough for the president as he faces sort of a choice nobody wants between their role as a parent and their job as leader of the free world. This is very, very tough for him.
Joe Matthew, let's bring you back into this conversation, because when you have an instance here with what's happening with President Joe Biden's son, Hunter Biden, here facing this, and then juxtaposition that against what Trump, when he was just found guilty on all 34 counts of falsifying those business records, at what point, because you've covered so many different election cycles, have you seen a dynamic something like this when you have two different nominees facing different issues such as these?
That would be never.
Right, it's what I figured.
We are repeatedly in uncharted waters here, but I would look back to what June was pointing to. There's going to be another trial. This is going to be something that involves a subject matter when it comes to taxes that will resonate with people. He's accused of not paying $1 million in taxes. It's going to bring back to the Burisma story, the so-called, like I said, Biden crime family that Marjorie Taylor Greene and others who've tried to impeach the president like to talk about, and it's going to happen much closer to the election day itself. This is going to be something that likely takes place in the fall. June can probably speak to any efforts to delay that trial. But look, people have short memories. Are they going to be talking about this when we're in the middle of that? So I would point you to the fall, and I would also remind you that we don't have a sentencing date yet, and it's going to be interesting to see the way that lands, whether this is incarceratory or if he faces a fine. That's still a question, of course, for Donald Trump as well.
So, June, I mean, I know we're kind of in uncharted territory here as it relates to this type of crime follow through to conviction. So are sentencing guidelines any useful to observers, or how do we think about a potential sentence here?
Well, as Jeannie said, 25 years is a possible sentence, but I can't imagine that the judge would sentence him to that. There's going to be a pre-sentence report. Of course, the pre-sentence report will show that he's still facing another trial, and that part of the pre-sentence report is whether you're addicted to drugs or you have any physical limitations. So it's hard for me to guess what the judge will do here. I mean, she knows all the facts in the case. She knows that there was a deal that collapsed, and so, it's just hard to say. Yep. I don't know what this judge will do.
Jeannie, when it comes to, because you had mentioned polling before, obviously there's been a number of election cycles in the last decade where the polling has been quite off, and also tends to be delayed in some ways. How does this potentially complicate some things in your mind?
Yeah, it's a great question, because this is very complicated. You're asking people what they may do in November if a hypothetical child of a president gets convicted, which has now happened in the last few minutes. So it's hard to know if people will, to Joe's point, remember all of this come November, and it will truly impact what they do in the polls. Certainly the Biden team is hoping it does not, but the fact that he is coming up with this other trial, which is obviously much more damaging if it goes forward in California, would potentially make the numbers we're seeing worse. But what we've seen so far is Immerse saying about 11% of Democrats say they will not vote for Joe Biden as a result of this. So I don't know if we could take that to the polls as they will, but that's what the numbers are saying. And one interesting thing to note is that Donald Trump, he has not been talking about this as a, you might expect, like as he would maybe the Burisma case or the tax case. He's been talking about it sort of empathetically, talking about his brother who was an alcoholic and died. I suspect when we get to the next trial, the rhetoric from Trump and the right will be much more difficult and tough on Joe Biden, and much more reminiscent of what they were saying and using Hunter Biden as a lightning rod. But on this, because it involves addiction, they haven't been quite as tough.
Joe, is this the new normal in Washington, D.C., where past presidents, relatives of current presidents, are being sued and taken to court? And is this the new normal?
It feels like it. I thought impeachment was the new normal, but I guess we're just doing this in criminal court now. I think you just have to think about it, though. It's like, which battle are we talking about? We keep focusing on November here for good reason. We're in the throes of an historic election cycle. But let's talk about the way the campaigns might here. Who won the day? Donald Trump probably did, because otherwise we'd be talking about his first meeting ever with a probation officer yesterday. He had to sit for that virtual interview for a half an hour, and it will not really be talked about now because of Joe Biden's son. But when you talk about who's going to win the month or the season, we have to factor in a lot of other things here, including Donald Trump's own sentencing, the debate that's coming up just a couple of weeks away, never mind the conventions that are going to follow it. So we do want to take it one step at a time here. And you could probably say pretty easily that this is a win for Trump. Be curious to see what he says. To Jeannie's point, he's been a little bit careful with this one because of the personal nature of this trial, and that will look a lot different in the next one.
June, Joe Matthew earlier was mentioning about the delay that we would potentially see in other cases when it comes to former President Donald Trump. Walk us through the dynamics of that and what could you, in your view, in your experience, what you think could potentially play out here when it comes to a delay like that.
Of Donald Trump or Hunter Biden?
Trump.
Oh, okay. So all three, Trump has managed to delay all three of the pending criminal prosecutions against him. That's the state prosecution in Georgia, where the Georgia Supreme Court is considering the role of the district attorney and the romance she had with the special counsel there. Then the classified documents case in Florida is a mess. The judge hasn't even put a trial date back on the court, and she's making a lot of very strange decisions on motions. There's speculation that the special counsel, Jack Smith, might try to go to the 11th Circuit to try to get her removed. And then there's the special counsel's case in Washington, D.C. on the election interference on January 6th. That case depends, and perhaps even the classified documents case depends on whether or not the Supreme Court rules that Donald Trump has some kind of presidential immunity. That will come, we expect, by the end of June, although the court's been so delayed that it might not, they may go a little bit longer, who knows, into July. So once we hear that, then we'll know whether or not the court says yes or no on presidential immunity or says maybe and sends it back to the D.C. judge for more proceedings. So this shows you that with a little bit of luck and the power of the former president and a lot of money to spend on lawyers. I mean, this is just incredible amounts of money on lawyers. 4 different cases actually going all at the same time. You can delay the justice system, and it's certainly been delayed in this case.
All right, Joe, real quick for you, one more. What do we expect to hear from the White House? Anything today, anything official from the president?
You might get a brief statement. I wouldn't be surprised. But, you know, to Jeannie's point earlier, they've been handling this as a personal matter. One thing I would look for is whether Joe Biden stops by to visit with Hunter on his way out of the country. He's going to the G7 this week. A stop in Delaware would be normal for him. Where his home is, and I wonder if he's going to get some FaceTime with his son, who, by the way, I'm just seeing from our reporters in the courtroom, has left the court without answering questions. This is going to be a family matter, I think, from here.
All right, Joe, we're going to let you go. We know you've got other responsibilities there. Joe Matthew, legal co-host of Bloomberg Balance of Power there from Washington, D.C. So I want to bring in right now Eric Larson, Bloomberg legal reporter for Bloomberg News. Eric, what's your take on this decision today?
Well, I mean, the fact that they came up with the verdict fairly quickly shows that they thought the case was pretty straightforward. A lot of legal, commentators thought that it was. It sort of came down to a checking of the box on a form. So the defense argued that Hunter Biden simply may have not actually believed that he was addicted or on drugs when he filled out that form saying that he was clean and could purchase a weapon. And the jury clearly did not buy that. They listened to all of that testimony from his family members and others who described his struggle with addiction, and apparently just did not believe that when he filled out that form that he could have really felt that he did not have a drug problem.
Was the conviction expected?
It really depends on who you ask. I mean, I've heard plenty of people say that they did think it was going to happen. They saw it as a fairly open and shut case. To be honest, a lot of people, I think, were surprised that he didn't plead out and avoid this trial altogether. Obviously, we saw a lot of the pretty embarrassing testimony for the Biden family come out, and a lot of folks argued that could have been avoided if he had just pleaded guilty and he would have come out with the same outcome here. Of course, he has a chance to appeal, so he could always try that as well. So it's perhaps not quite fully done.
Right. So, Jeannie, if the campaign, I'm sure the campaign heads, they're getting together right now and they're discussing the ramifications of this ruling. How do you expect the campaign over the ensuing months to deal with this? How aggressively? How overtly? How do you think they'll approach it?
Yeah, this is tough. I mean, I'm hoping they were prepared either way going into this. They certainly knew it wasn't, either way he was going to be convicted or acquitted. I think they're going to continue to say that this is a very, very personal matter for the president and the first lady. They love their son. They support him. But the justice system, everybody, regardless of whether we are a former president or the president's son, everybody is subject to the law, and Joe Biden did what he should do in terms of keeping away from the DOJ prosecuting his own son. I think they're going to take that tactic. But again, I would just suggest that this is very, very tough for the president, because if, and this depends a lot on what happens in sentencing, if you can imagine if Hunter Biden is sentenced to jail for a significant period of time, how difficult it would be for Joe Biden not to do what he is legally able to do, which is pardon his son. He's told us he will not. I don't think he should, but I know that that will be very difficult for him personally.
Well, I mean, is that predicated upon whether he wins or not? I mean, if he's presumably, if he were to lose the election, he would then have no really political fallout from pardoning him.
That's right. So it's such a good point, because if he is a lame duck president, we may see it more likely that he turns over his, goes back on his decision and does pardon him. But of course, all of these people have to think about their legacies as well. And for him to come out very publicly and say he will not pardon him, and then to do it as a lame duck president, that would really tarnish his image and his legacy as well. So there's a lot to consider. This is very tough. And I think, while we were saying he's facing 25 years, I don't think he's going to get anywhere near that. But I imagine that this is going to continue to weigh on the president.
Eric, I want to bring you back into this conversation because, as June was mentioning earlier, Hunter Biden is scheduled to face a jury in Los Angeles in September on charge related that he violated different tax laws. What else do we know about that? Because September runs up pretty close to the election, obviously, that's going to happen on November 5th.
Yeah, I would be very surprised if they didn't make an effort to delay that trial again. I know they've already had tried that. But I think if it does go ahead, it's another serious issue for the Biden family, to say the least, because it's as salacious and embarrassing, perhaps, as this trial was for the Biden family that we just had. This next one could be, far more serious and show different ways that Hunter Biden allegedly manipulated the laws in order to avoid paying taxes. And it's the kind of crimes that you might not get as much sympathy for from the general public. Hunter Biden is accused of profiting off of his family's name, doing everything he could to make money, and then apparently, allegedly, not paying taxes on everything that he got.
All right. I'm going to ask our three guests to stick with us for a couple moments. We need to get a reset on these markets, and for that, we're going to check in with Charlie Pellet.
Thank you very much, Paul. Here's what's going on. We've got NASDAQ holding on to a gain right now, higher by 9, little change right now. The S&P 500 index down 12, drop there of just about 0.2%. The Dow now lower by 204 points for the Dow, a drop of just about 0.5%. 10-year 4.44%. We have got the 2-year yielding 4.85%. Spot gold, little change now, up 92 cents the ounce to 23.11. And West Texas Intermediate crude now higher by 0.6%. WTI 78.22 for a barrel of WTI. Bottom line, looking at a mixed market right now. Yes, we are off session lows, but still a 12-point drop in the S&P 500 index. 10-year 4.44%, with a 2-year now yielding 4.85%. Gold up $1 the ounce, 23.11 right now. Federal Reserve officials are gathering in Washington, and Wall Street's looking for clues on how to game out 2025 and beyond. And with more, here's Bloomberg's Vinny Del Giudice.
Keep an eye on the Fed's dot plot economic projections as March Fed officials signal 3/4-point rate cuts in 2024, but they're expected to scale back. The economy continues to surprise, financial conditions remain loose, and inflation is above the Fed's target. That spurred chatter that rates may, at some point, need to go higher. They're already at a 2-decade high. We'll get official word on Wednesday. Also Wednesday, the Labor Department issues a fresh assessment of the cost of living. Vinny Del Giudice, Bloomberg Radio.
An uptick in the number of companies enacting stock splits this year has Wall Street looking at who could be next. Some analysts pointing to Meta Platforms, Meta is the only stock in the Magnificent Seven that has not ever split its shares. Meta shares today, they are trading lower. Right now, we've got Meta down by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. The news here just breaking moments ago. Hunter Biden convicted of gun charges by a jury in Delaware. We've been breaking that down with a team of guests here. Jeannie Sheehan Zaino, she's a Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Also, we have Eric Larson, Bloomberg legal reporter here in our studio, and Kaylee Lyons, co-host of Balance of Power on Bloomberg Television, joins us here. Kaylee, we were talking with Joe earlier. I mean, what's the feeling within D.C. about this news about the conviction of Hunter Biden, and most importantly, what it means for President Biden and his campaign?
Well, certainly there's implications potentially for his campaign, Paul, as this is his son that has now been convicted of gun crimes, and it brings a great deal of uncomfortable scrutiny to the entire Biden family, as this is a story of not just crime, but also drug addiction that his son has been dealing with. But it also potentially could have a kind of reverse political ramification in that Joe Biden has also been fielding a lot of accusations from his opponent in November, Donald Trump, as well as others in the Republican Party, that the justice system has been weaponized against the former president. Now that same justice system has found a jury of 12 finding his son guilty of 3 separate crimes. So potentially it could throw some cold water on that whole weaponization argument. Nonetheless, it still presents not just great political difficulty, but personal difficulty as well. We have heard repeatedly from President Biden that he loves his son, that he's proud of him for his recovery and his effort to stay sober after his period of addiction. He has also said he will not be pardoning him of these crimes. He said as much just days ago. So it's definitely taxing for the first family, especially as President Biden is now, after this news today, going to have to get on a plane to Italy for the G7 and carry on the duties of the presidency while the entire Biden family deals with the ramifications of this.
Jeannie, want to bring you back into this conversation. To Kaylee's point, Hunter Biden has become actually the first child of a sitting U.S. president to be convicted of crimes. When Kaylee was talking about ramifications, what do you foresee what could come in the wake of this after Hunter Biden was found guilty of gun charges by a federal court in Delaware?
Yeah, I think one of the things many people close to Joe Biden and people who love him are very, very worried about the toll this is going to take on the 81-year-old president as he looks at his only living son facing jail time as a result of this, and to Kaylee's point, another trial. So I think number one is going to be the personal toll on he and the First Lady. I think politically and from an electoral perspective, there is the concern that we are seeing in polls, granted they are still early, that you may see some Democratic supporters move away from the president. Emerson says that's about 11% of Democratic voters who may not vote for Joe Biden as a result of this verdict. Whether that comes to fruition or not in November is a question. But again, the tax charges, I think, are politically much more of a problem for Joe Biden than is the gun, because as embarrassing as these revelations were, the idea about the taxes over $1 million, if he's convicted of that, potentially starts to make Hunter Biden once again the lightning rod that he has been for Republicans, and gives them a way to continue to pursue him in the wake of the fact that they haven't been able to make much headway on impeachment of his father.
Eric, got a question for you, then we'll let you go here. Sentencing here. Any sense of timing when we'll hear about the sentencing? What's a typical case like this look like?
Honestly, they haven't said when the sentencing will be yet. I think they'll try to do it relatively quickly. Obviously, these preparations for this other trial could be taken into consideration if they're looking to delay the sentencing, perhaps until after the election. I'm sure that's what they would love to have happen, but it's likely to happen before the election.
Okay. All right, Eric, thanks so much for joining us. Eric Lawson, Bloomberg legal reporter. I want to bring in Jeff Feely, Bloomberg legal reporter. He's joining us outside the courthouse here. Jeff, tell us what's the feeling, what's the mood like outside the courthouse?
Well, there's relief because nobody really wanted to stay for a very long deliberation on this. Not a complicated case, so it took only about 3 hours for the jury to convict him. We got some protesters outside, calling the Biden family, the Biden crime family. It's your typical sort of showmanship. So.
I want to bring Kaylee back in real quick because you obviously are all over Capitol Hill for us. When it comes to any sort of statements coming out of any political figures in Congress, have you heard anything just yet in the wake of this?
We actually have, Jess. We got a statement from Jim Comer, the chair of the Oversight Committee, who has been one of those individuals who have been leading the impeachment inquiry into Joe Biden, into what he calls the entire Biden crime family. And he said this in a statement: Hunter Biden's sweetheart plea deal was smoked out after scrutiny by a federal judge. He says, today's verdict is a step toward accountability, but until the Department of Justice investigates everyone involved in the Biden's corrupt influencing, peddling schemes, it will be clear department officials continue to cover for the big guy, Joe Biden. Now, they've had some difficulty in their congressional inquiries and hearings into Biden and his family of actually finding evidence of those alleged schemes. But clearly, this is a narrative that they are going to continue to push. And it'll be interesting to see if after this conviction of Hunter Biden, if we see a reinforcing of those efforts on Capitol Hill to take action against the president or his family in terms of the actual impeachment inquiry moving forward. While we have got this statement from Chairman Comer, we have yet to get a statement from the White House, and that's what I'm on watch for next. How and when does President Biden address this directly?
Jeannie, how do you think the Trump administration will use this conviction today going forward in this campaign?
To continue on this issue, to talk about it from the perspective of addiction. That's what they have said. That's what former President Trump has been doing so far. But I think we will, particularly as we see the Los Angeles trial come closer, we will hear more from them about the Biden crime family, those things that are the people protesting outside the trial, they're saying, and to say that while Hunter was found guilty on this charge, the real thing that the DOJ should be investigating, they're not, which is this Biden crime family, the connections with the brother, et cetera, and all the way up to the president. So I think we will hear more of that from Donald Trump. But again, surprisingly, in the last few weeks, he has been more muted on this. Somebody said more humanistic, if you will, and talking about it from the perspective of addiction and his own brother's unfortunate alcoholism, which led to his death, which was, not what you'd expect from Donald Trump necessarily, but what we heard in his latest interview with Sean Hannity.
Let's bring Jeff Feely back in. Bloomberg legal reporter, you're standing outside the courthouse. You were talking to us about the mood outside of there right now. What else are you seeing at this point?
There's some spectators across the street watching the circus, and there's a bunch of media people waiting for the lawyers to come out and do a press event. So that's pretty much the scene from here.
Do we know when that press event would take place?
Sometime, in the next, I assume, half hour or so.
Hey, Kaylee, I'm looking at the president's schedule for the remainder of today. He's delivering remarks at 1:30 p.m. Wall Street time at Everytown's Gun Sense University at the Washington Hilton. Then he'll go back to the White House. And then at 2:30, the White House press briefing by Press Secretary Karine Jean-Pierre. So there will be a couple of opportunities here this afternoon for the president or the administration to deliver remarks. Do you expect something there or maybe even something separate?
Yeah, the question is whether Joe Biden will stray from his prepared remarks that he's set to give at that Everytown event this afternoon, Paul, and actually potentially answer a question on Hunter Biden's conviction, or whether he will do so just in a written statement, perhaps, and leave the rest up to the press secretary, Karine Jean-Pierre, to handle in the briefing. But obviously, the White House is going to have to address this in some form, as this is the president's son that we are talking about. We have heard consistently similar messaging from President Biden and other members of his family, just that they support their son and in his effort toward recovery. They really haven't strayed that far from it. And the Biden administration and President Biden specifically has really been trying to take a hands-off approach with the entire way this system of justice has worked thus far. Again, as I've said, as we have all said repeatedly, he has said he would not pardon his son after being found guilty of these crimes, convicted of these crimes. And he's also just really not entered himself into these proceedings whatsoever. I would remind you that we saw a number of members of the Biden family in court. Jill Biden, the first lady, was there almost every single day, but Joe Biden himself never was in attendance. So it'll be interesting to see what he does in the aftermath here. If he indeed does say anything to the camera, whether it is traveling back to the White House today or traveling en route to Italy for the G7. And again, I still am checking the statements and releases page on the White House website, refreshing every 5 seconds. Nothing yet in terms of a statement or reaction.
We always appreciate your hard work. That's Kaylee Lyons, co-host of Balance of Power. And now I want to jump back in and bring in Jeannie here, who kind of covers the political optics of how all of this sort of plays out, especially because we do obviously have the U.S. presidential election in November. You know, what's next here when you're looking from that sort of point of view, Jeannie, and what you think is important moving forward?
Yeah, you know, I don't think that this conviction is going to weigh particularly heavily from an electoral perspective beyond the personal toll it takes on the president. I would say something very different if we do see the trial on the tax fraud in Los Angeles in the fall. I think that could potentially be a much bigger issue electorally due to the timing and also the nature of that trial. You know, I suspect the president will make some remark about this, but given how Joe Biden tends to communicate with reporters lately, it'll probably be when he is going to the plane and there'll be engines roaring and people running around, and he'll say something that we can't quite make out. But I think we'll see something like that, and I think we'll see a statement. But those statements are going to be really, I love my son, I support him, I want him to be fully recovered, and keep it at that. So I think they're going to try to keep this wall that they've put up between the campaign and this trial. You know, I think one thing to note, ironically or not, is that this trial was really just streets away from the campaign headquarters in Wilmington. You know, just the fact that they are so close and he has been convicted so close to his father's campaign headquarters is stunning in and of itself geographically.
So I guess next step, I mean, the campaign trail, I mean, they're going to be on the road every day between now and November 5 here. We've got the debates. I mean,
you also have the Republican National Convention in mid-July, and then obviously the DNC will come in mid-August too.
Yep, exactly. And then we've got the debates as well. From a debate strategy standpoint, how do you handle all these things? The Democrats with President Trump and the Republicans with Hunter Biden.
Yeah, I think one thing to watch out for, the president has been calling Donald Trump a convicted felon, as has the campaign. I don't know if they will pull back from that a little bit, given what's happened with Hunter today. So it'll be interesting to see if any of the language changes. But I do think the president, if it's raised in the debate, will say he's my son, I love him. We can't forget that Donald Trump has children himself. And of course, those children have faced lots of questions about the money that they have gotten and taken. I mean, we have just seen with his son-in-law, the money, the issue of what he's going to do with the money he has just gotten. So he has his own questions with his children. So maybe he'll want to stray away from it just for that reason alone. But I do think that in this case, it's not going to weigh as heavily electorally. But again, we have other cases to come with Hunter Biden, maybe not with the president, but we are waiting for that immunity decision by the Supreme Court. So we are not going to escape sort of the intertwining of the criminal justice system, the justice system, and our electoral system in a way we've never seen in American politics. So it is, uncharted territory, to say the least.
Yeah, absolutely, all the way around. All right, Jeannie, thank you so much for joining us. Really appreciate your time here. Jeannie Sheehan Zaino, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. So again, significant news out here for the Biden family, for Hunter Biden, found guilty on gun charges by a jury in a Delaware trial. while we were away, the markets have been kind of churning a little bit lower here. We have the S&P 500 off a third of 1%, the Dow off 225 points. That's about 0.6%. And the Nasdaq's only down about 8 points here.
Financial stocks, if you look at the S&P 500, using the IMAP function, it'll break down the industry groups in the index. So you can see the financial sector down more than 1%. We had talked about the BKX earlier, obviously tracking bigger banks and some regionals as well being under pressure there. So you're seeing some bigger names like JP Morgan down more than 2%, but then also some regional names too. Obviously, this is day one of the Federal Reserve decision that we will actually get tomorrow afternoon. So the meeting starts today. And then, of course, we do have a CPI at 8:30 tomorrow, Washington time. So still a lot of other things ahead for markets in the next couple days.
Continuing to be a good day for Apple. Apple's
That's
up about
right.
5.9% today, all-time high for Apple.
Trading at records.
Yeah, exactly. Has a $3.13 trillion market cap on the back of some pretty positive moves in the world of AI and integrating AI onto all of the Apple products that we have. So we'll keep an eye on that.
That's right.
Yields coming in just slightly. 10-year Treasury off about 2 basis points, 4.44%. And WTI crude oil up slightly, just over $78 a share. Balance of Power with Joe Matthew and Kaylee Lines. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Hunter Biden is found guilty on all three. What does it mean for the race? Welcome to the fastest show in politics, as the president's son is convicted on 3 gun charges by a jury in Delaware. We'll get the latest on the actual trial from June Grasso at Bloomberg Law, insights from former Watergate prosecutor Nick Ackerman, and we'll turn to the political side of this. What will be the impact, if any, on this race? Former Republican Congressman Denver Riggleman, who had his hands on Hunter Biden's laptop, will join us along with our signature panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. It's all after a look at Wall Street. We start there right now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Lots going on. The Dow, the S&P, NASDAQ, all in the red, right to the numbers. A slide in banks weighing on stocks ahead of tomorrow's Fed decision. That'll happen 2 o'clock Wall Street time. The news conference with Fed Chair Jay Powell, 2:30 p.m. on Bloomberg Radio and Television. Right to the numbers with the S&P down 17, drop now of 0.3%. The Dow down 247, down 0.6. We've got NASDAQ lower by 10, a decline of just under 0.1%. 10-year 4.44%, the 2-year 4.85%. Spot gold down 73 cents the ounce, 23.10, virtually flat on the day. West Texas Intermediate crude up 0.5%, 78.11 for a barrel of WTI. A day after WWDC, we've got Apple shares climbing to a record, up now by just about 5.8%. Up next, CPI report, FOMC decision, Anna Wong, chief U.S. economist at Bloomberg Economics.
I think Powell will be dovish. I also think that the Fed will not be alarmed by the jobs report last Friday in either way, either by the rising unemployment rate or the very strong non-farm payroll.
That's Anna Wong recapping S&P down 16, down 0.1%. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you. Get that man a lozenge, and welcome to the Tuesday edition of Balance of Power. Here we are again on the radio, on the satellite, and on YouTube, and we do have breaking news. If you've been with us just a couple of hours ago, Hunter Biden, has it even been that long? Not even. An hour ago, Hunter Biden convicted on gun charges by a jury in Delaware. We saw it coming. It's only 3 counts, and we were told with overwhelming evidence this should not be a long deliberation, and it wasn't. 3 up and 3 down. And as you wonder, we keeps asking, what's Joe Biden going to do? What will he say? How does the White House handle this? We got the statement. This is officially from the President of the United States. I'm going to read the whole thing for you. Quote, as I said last week, I am the president, but I am also a dad. Jill and I love our son, and we are so proud of the man he is today. So many families who have had loved ones battle addiction understand the feeling of pride seeing someone you love come out the other side and be so strong and resilient in recovery. Joe Biden goes on to write, as I also said last week, I will accept the outcome of this case and will continue to respect the judicial process as Hunter considers an appeal. Jill and I will always be there for Hunter and the rest of our family with love and support. Nothing will ever change that, unquote. So that's how he's going to handle it. He will be speaking later today. Questions about whether he might indulge the press with something in person. We'll find out about that. But this is the first statement, the first reaction from the White House. June Grasso has been all over this from the beginning, and she's with us now from New York. Of course, the host of Bloomberg Law. We knew it would be pretty quick here, June. 3 counts guilty. Do we have a sentencing date? What actually happens next procedurally?
The judge didn't set a sentencing date yet, but she said it's within usually about 120 days. So that puts it in October, I think. And then we'll find out. I mean, it's not, though he is facing, and we say facing, like the max he could get is 25 years. There's also a chance that he could get probation because, and we have to go through the sentencing guidelines to look at, this is like a mathematical calculation that federal prosecutors who do these kinds of cases and defense attorneys know how to do. But there is a chance that he could just get probation according to what I'm seeing because the gun wasn't used in any kind of a crime and he only had it for 11 days. But we'll learn more about that as we go through the guidelines.
Well, understood, yeah. It's to your point, 2 of the gun counts carry a prison term as long as 10 years, another punishable by as many as 5, brings us to a potential 25-year term. How about fines, though? Would they not be more likely?
Well, I think, fines would be in order. I think, is it $250,000 for the 2 counts, each of the 2 counts?
You're the expert.
Well, I'm not actually expert on the sentencing guidelines unless I study them. So I think that the fines are pretty high, and yeah, she might do a fine as well. But what's important here is that, despite what Donald Trump has been saying about the justice system, here you have a case where the Biden Justice Department prosecuted the president's son, and there was a guilty verdict, and you're going to have a Trump-appointed judge give the sentence. So it's kind of hard to argue, although I'm sure they will, it's kind of hard to argue that the system is, biased.
Right, and this is federal court as opposed to the New York court that Donald Trump was in. Are we going to hear from the Department of Justice? Is there a news conference? Are they treating it that way, June, because of the level of scrutiny that this case is getting?
That's an interesting question because it is the special counsel here, and that special counsels have been subject to a lot of criticism. This special counsel was appointed at the sort of the last minute because he requested, and there's this mystery about why he needed to be a special counsel. Was it just so he could bring, because it's the same counsel who was investigating Hunter Biden in Delaware, so he could bring cases in Delaware and he could bring the case in California, the tax case. So it'll be interesting to see. I would think not, because, federal prosecutors are different from state prosecutors who go out there, a lot of them elected, and they go out and they talk after the verdict and, give themselves kudos, et cetera. So federal prosecutors keep it closer to the vest. And since there's another case pending, I would think that he might not do a press conference. I mean, look at how many press conferences Jack Smith has given and how, how illuminating they've been, 5 minutes of a statement. So I don't think so, but it's always possible.
It's really interesting. You've been good at crystallizing this case because as we write, there's been some very sensational and emotional testimony, family members and ex-lovers. You can read about it on the terminal, talking about Hunter's drug-fueled lifestyle when he was in the throes of addiction to crack cocaine. But what we're talking about here, a deeply personal matter for the Biden family, is whether he checked a box, June, as you've stated.
I know. The prosecution, the closing argument said we had to do this. But did they really have to do it the way they did it? I mean, they dragged him through the mud in, ways that you mentioned, and also, the kind of pictures that they showed, the laptop, and they had the evidence. So I don't think they had to really go to that length to do it, but maybe they just wanted to make sure the jury saw him for who he was. What's interesting is I think that the defense kind of blew up its case because on during their case, they had Naomi Biden, and she was supposed to testify, which she did, that her father, she saw him around that time, and he seemed really good, he seemed healthy. But on cross-examination, the prosecution brought out these text messages from the time when, around the time when the gun was being purchased, that showed that he was, he couldn't be found. She was like, where are you? Am I going to see you? And then all of a sudden he pops up and says, I need the car. And it was 2 a.m. So that, and then you saw what happened was all of a sudden the defense said, no more witnesses today, when his uncle was supposed to testify. And there was apparently, some yelling, according to one report, from the room, and then the defense rested without calling Hunter Biden. So the defense had a tough road. I think the only thing they were hoping for was jury nullification, that some of the jurors would say, we have people in our family who are addicted, and there are several jurors who've been through the whole process, and we don't think that he should be, prosecuted or sentenced for filling that box out. But that obviously didn't happen at all. The jurors were, didn't let their family experiences get in the way of their decision.
Yeah. All right. June Grasso, we thank you, as always, the host of Bloomberg Law. Thanks for being with us here in the clutch as we had the voice of Nick Ackerman. I'm glad to say he's with us, the former assistant U.S. attorney, former assistant special Watergate prosecutor. Mr. Ackerman, great to see you here. Thanks for joining now that we have a verdict. Has this whole argument about the weaponization of the Justice Department been put to bed?
Yeah, I think so. I mean, it's pretty obvious if the Department of Justice is going after the president's son, that you can't very well say the Department of Justice is weaponized, not to mention the fact that you also have the prosecution of Senator Menendez that's going on in the Southern District of New York, a Democratic senator from New Jersey. So I think it's pretty obvious that the Department of Justice is an equal opportunity prosecutor, whether you're a Democrat, an independent, or anything else. If you commit a crime, you're going to pay for it.
What's your take on this case? We spent so much time talking about Donald Trump's